We're on. We're live.
We are live.
I hit the button. We're live.
Happy Friday, everybody.
We're live, baby.
We're live. Yes, I did it. What's up?
Woo!
What's up, baby?
What is up, Spencer? How we doing? How we doing out there, Zinger Nation? Happy Friday. I don't think the markets know
It's Friday.
that it's supposed to be a happy Friday.
It is not a happy Friday for a lot of people today. If you are a long-only trader or investor, you're not having a good time today. If you want to if you want to buy things, you're not having a good time today.
Well, if you want to buy the dip, maybe you're having a good time today going out there buying the dip. But
we can talk about that. You know what? Actually, today's a good day to talk about this sort of thing because the market is red pretty much across the board. We've got a lot going on today. We're gonna have Chris Katje talk about SPACs. We're gonna have a CEO interview, biotech at 12:15, SEER Bio. We're gonna have a new segment we are debuting at 1 o'clock, a recurring segment, all about shorting stocks with TradeZero. Today is a good day to have them on because if you are short today, you're having a good time.
yeah.
And if you're not, you're not.
Speaking of that, Spencer, I'm going to go ahead and pull up my handy-dandy Robinhood, talk about a couple trades that I made.
Boy.
So today, I actually had some puts on NVIDIA going into today that I bought yesterday, kind of right into close. We saw that headline on the lawsuit that the SEC is looking at stopping NVIDIA's purchase of ARM.
Mm-hmm. We did see that.
And on top of that, NVIDIA just looked a little overextended, so I bought some puts that expired today on NVIDIA.
Okay.
They were up nicely, Spencer, but I'm kind of kicking myself because I sold them and then NVIDIA dropped like another 2%. Like I left about probably
Come on.
$700 or $800.
You'll never be happy if that's how you're going to look at things.
I know, right? So but I made another trade that hasn't been working out yet, but I bought a Moderna call.
Oh, no.
That expires next week. No. So my thought process on this, Spencer, is that I think we could see a catalyst that's good for Moderna maybe over the weekend or maybe on Monday. Maybe the CDC announces that they're going to only consider fully vaccinated if you have your booster, something of that nature. Maybe people are going to go out and get more vaccines now that we have this Omicron spreading. But Moderna, it's not doing well today, but we'll see how it does on Monday.
All right, so nice. All right, we had a bearish trade on NVIDIA work for Aaron, a bullish trade on Moderna not working so far. We got Chris Katje here, so let's start the show, and we can start talking about some SPACs. Where's our intro? I don't know where it is. Here it is.
This is Benzinga Live with Spencer Israel and producer AB.
What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wujasik from Trend Spider. We have Chris Katje here. He has warned us that his internet may go out at any moment, but we are prepared for that scenario. Chris, what's up?
Hey guys, what's going on? Yeah, hopefully everything holds steady today with the internet. But
wait, real fast, because you're a couple hours west of us. Is it snowing where you are?
It snowed a little bit earlier today, but nothing accumulation.
Okay, because we got some flurries here. You can see in the background, but nothing. Yeah, no accumulation as of yet.
Yeah, it barely snowed here, so maybe that's what you guys are getting now.
All right.
We're getting some flurries. I don't know if you can see in the background, but
yeah,
nothing crazy. Nothing crazy.
I see some people ice skating, so
yeah. That'll be us in a little bit here if the market keeps going down like this. But anyway, Chris, we had a lot going on in SPAC land. I was looking at some of the headlines. Whoa, look at that view! That's my computer. That's my desktop computer. No one is sitting there because I'm over here. Okay, Chris, we got a lot going on in SPAC land. Talk about it. Tell us about it. What's up?
Yeah, so some weeks there's lots of deals. Some weeks there's not a lot of deals. This week was a heavy deal week. So last week we only had 2 SPAC deals announced. And this week now there has been 7 deal announcements, 2 deals called off, and a lot of news. So we can dive in here, go one at a time. So the big SPAC deals I want to highlight. Up first, announced today, we have APSG. So this is Apollo Global Management backed SPAC, Apollo Strategic Growth Capital, and they are taking public American Express Global Business Travel. So a lot of people are probably familiar with the American Express travel brand. It's valued at $5.3 billion in this deal. The PIPE of $335 million includes investments from existing investors, and also they're bringing on board Sabre Corp, which is a travel company, and also Zoom, right? So the Zoom video company. American Express is going to own 30% of the company, and Expedia will own 14% of the company after the merger. So they're the leader in a $330 billion managed global business travel industry. They had transaction volume of $39 billion in 2019, over $2 billion in revenue. It was spun off from American Express in 2014. They had over 19,000 corporate customers in 2019, including 40 of the top 100 customers by travel spending. What do you guys think? Do you know the American Express travel brand? Helping small businesses, medium businesses, plan the corporate travel events.
Yeah, I'll be honest. I'm pretty ignorant here. Speaking from experience at Benzinga, where we just sort of, maybe not anymore, but we definitely used to just YOLO all of our travel.
YOLO all the time, right?
Some of us, and I'm not going to name names here, but some people in charge of booking travel at Benzinga like to wait till the very last minute. # Luke Jacoby. But so no, I don't have any experience with this. So I'm pretty ignorant to the entire industry.
Yeah, I mean, I think the keys here, right, are they're getting Sabre and Zoom on board as investors. They're backed by American Express and Expedia. So there's some comfort there in these big names. But I mean, Spencer AB, I think we've talked about this before with companies and their presentations when they go off of 2019 numbers, right? The pandemic obviously hurt travel. So unfortunately, we don't have a real clear picture of this company's financials over 2020 and what's ahead, because they're going off of 2019 and hoping for, business travel to come back. And we're seeing pent up travel demand, but I just don't know how much of that business travel comes back right away. What do you guys think?
Yeah, I mean, I would totally agree. This is the last thing that the market wants right now, is a company that doesn't have great clarity on its business. And that's what you're saying we have here with American Express Global, so business travel. So anyway, not the kind of company I'd be buying right now. That's not a very high bar to clear. Frankly, I wouldn't be buying anything. But global travel, I'm skeptical. I hope it works out for them. The timing has me scratching my head a little bit. But
yeah, definitely. Another deal announced this week. We've got CFVI, and this one traded pretty well this week. They are bringing Rumble public. So Rumble is a neutral video platform valued at $2.1 billion. So they are built with the belief that all creators can freely express themselves. They target the big tech companies that have quote unquote censored their creators. So mentioned in the company's investor presentation, several celebrities. They've got 36 million monthly active users, including 23 million in the US, 8 billion minutes of watched video time monthly. So that celebrity list includes Dr. Drew, Russell Brand, UFC fighter Jorge Masvidal, Dan Bongino, and of course, former President Donald J. Trump. And it was noted that Trump joined Rumble earlier this year, and that is in addition to launching his own social media platform, which is going public with DWAC. And then there was an article out today on Daily Beast that said, according to email and server records, it appears Rumble and Trump's still to be launched social media app, Truth Social, are already sharing some infrastructure. So take that with a grain of salt. We saw the run up, right, in CFVI on the chart there, as this was considered a potential Trump play. If they're working with DWAC, it of course, is going to get more attention. Also, Matt Kors, one of the AMC investors, he is on Rumble. And then they also named Joe Rogan in the presentation. He's not currently on there, but had some pretty positive things to say. Guys, I don't know Rumble. I had never heard of it until this deal. Do you know Rumble, and what does it mean to have some of these celebrities?
No, I don't know Rumble. I think we all forget just how many social networks have come and gone over the years, right? We all know about the big three, big four, if you want to count Pinterest in there, or TikTok, so Facebook, Twitter, Snapchat, TikTok, those are the four, Pinterest, 5, and I'm including Instagram in with Facebook. And outside of that, it is a tough game. It is a tough game. I am bearish the entire social media platform space right now. All of them. Even the best one. Even the biggest ones. Facebook, Twitter. I'm bearish all of it. So if I'm bearish Facebook or Twitter, I would certainly be bearish Rumble. It is really, really, really hard to A, achieve scale, and then B, once you do achieve scale, how do you monetize? Facebook figured it out. Via Instagram. Snapchat appears to have figured it out. Pinterest, sort of the same. Twitter hasn't quite figured that out probably out yet. It's been over a decade. So it's really, really hard. I would say pass.
Yeah, and you got Mike in the chat saying Friendster, LiveJournal. I mean, obviously MySpace.
LiveJournal.
I mean, bringing up some retro names there that I know I have heard of as well. But yeah, I mean, I think the big thing with this, right, was the fact that Donald Trump's on the platform. Now the potential of a working partnership. Look at the stock price. You already had the run. We're back down to 1019. I would be careful here until, any sort of clarity on what the relationship is with Trump and his new platform.
I mean, there are more. So we haven't even heard of all the social network companies out there. That's how many there are, right? You got Rumble, you got Parler. There's like a dozen that we haven't heard of. You know what I mean? And they're all tiny, and they're all fighting to get the same eyeball. So it's a tough game. Pass.
It sounds like that one that, Demi Lovato is endorsing.
See, I don't even know what I don't even know what you're talking about.
Oh, yeah.
I don't even know what he's talking about. You don't even know what it's called.
I'll find it. Hold on.
we had a pro headline. I remember when it happened. Also, Playboy is launching a creator platform called Centerfold, right? And they had big news yesterday that Cardi B is going to be the leader of that. So again, another platform coming out, that hasn't even launched yet, Spencer. So there is so many out there.
Just what we need. Aaron, what's it called?
I
don't know. You don't even know. Okay.
That means they must not be that big if you can't find it that easily.
Moving on.
Another deal announced. We have BOAS. So they are bringing Selena public, valued at 1.2 billion. So Selena, they are a hospitality company. So think Airbnb for millennials and Gen Z. So they have a pay-as-you-go model where you can, rent these hotel rooms from in their cities, or you can pay a subscription fee and, get access to unlimited rentals across the world of any Selena hotels. It kind of compares to like a Moxie from Marriott, a Sonder. Again, a growing brand, but really targeting millennials and Gen Z users. I actually spoke to Brian Friedman, the CEO of the SPAC, on the phone this week. We talked about, the deal, and they've got a growth plan, but again, heavy target on the Gen Z, the millennials, and the travel industry right now. I mean, we know that there's that pent up demand, but again, this wasn't a brand that I was as familiar with before this deal.
Wait, I'm just trying to understand it. So Selena is it like Airbnb? Is that I'm trying to get around my...
It's like Airbnb, but in a hotel.
So...
The Airbnb for millennials and Gen Z.
Wait. We have hotels for hotels.
Yep. So this is subscription. So I mean, it's different than the hotel model, but it's in the same industry.
I'm sorry. Okay. I never heard of this company. I wish them the best, but come on, guys.
And then we had a crypto play this week, right? So ADEX. They are bringing grid infrastructure public, $3.3 billion valuation. This is a self-mining company, vertically integrated. They use low-cost energy to operate their portfolio, focusing on carbon-free energy generation. That's a big growing sector of crypto mining, right? The carbon-free. They plan on having 734 megawatts of mining capacity by 2023 and a power cost of less than $25. They're projecting 2023 revenue $1.6 billion, and they will have a break-even Bitcoin production cost of $6,225 by 2023, which they said is below peers. Again, I mean, you mentioned it with the social media platform, Spencer. There's a lot of crypto companies out there, and a growing number of them going public. The clean energy and the carbon, free, I think is an area of focus here. But again, a company that I, did not know before the deal was announced.
Me neither. And then we probably don't even know all the crypto mining companies out there. But hey, at least we know, silver lining here, at least we know that like Bitcoin mining as a business works, which you can't say about some of the ones you just talked about. So there's that, which is nice.
Yeah, definitely. And then the other deals, which I don't have a ton of comments or news on. We had ACTD, which is merging with Opal Fuels. This is a renewable energy play. Didn't get much love on the deal announcement. Then we have ACAH, which is merging with Ascentium, which is 3D printing and additive manufacturing. Again, we've seen a lot of 3D printing companies go public, especially via SPAC. And then SCLE, which is merging with Voltus. So that's the 7 deals this week. Again, a lot of deals compared to last week's news cycle.
Compared to the last few weeks, no?
Yes. Yep.
I mean, it's been a relatively quiet period. We also had some deals that were called off, right?
Yeah, so NSTB, which was going to merge with Apex Clearing, they called off the deal. This is one I was actually excited about. So Apex Clearing, you don't know, they're like the thing behind the thing, right, for brokers, for crypto. They power those transactions. This is one, that you see that chart now, and that deal was called off, and people, got rid of their holdings. So they still have time to find a new deal. They still have, net asset value at $10 plus interest. So there is, an ARB opportunity there, but I think people will just stay away from this one, until a new deal is announced.
I wonder if this is just because they've seen what the market has done to companies like Robinhood, Coinbase. Robinhood is, I mean, it's not quite the same, but Robinhood does do its own clearing. It's a tangentially related business. Apex is like a real business, right?
Yeah.
They're a real company with real revenues. But I wonder if they just saw the environment and they were like, or the acquirers just said no. I don't know. But I'm with you. This is one I was actually looking forward to.
Yeah, I know. This is one I really wanted to see complete the merger. So again, hopefully a new target is found, which both companies well. And then we have this. This is an interesting deal call off, right? Because when you have two sides come to the table to complete a deal, sometimes you have both parties that say, hey, let's not do the deal. And then you have sometimes where one party wants to do the deal and one doesn't. And that's what we have here. So FST, this is the company that was going to merge Fertitta Entertainment. So it's a group of restaurants, a group of casinos, and they also own a stake in Golden Nugget Online, the online gaming company, which is actually being acquired by DraftKings. So Fertitta, he wants out of the deal, but FST wants to keep the deal. So this one could get tied up for quite a while. Again, with, the two parties not agreeing. I mean, casinos, restaurants, online gaming, it seemed like a decent play. Reopening, again, look at the chart. I mean, shares got up to 13. They actually, for a SPAC, I mean, was actually trading above 10 pretty consistently. And now, obviously, you have the fall with the risk coming.
So this is basically all the stuff that Tillman Fertitta owns except for the Houston Rockets. Is that right?
Correct. Yep. You got like it's like Landry's, Bubba Gump Shrimp, Morton Steakhouse, I believe, and then the Fertitta Casinos, and then also again that stake in Golden Nugget Online, which is essentially going to be cash and DraftKings shares after that deal.
Yeah, he's not dumb. He wants out, and this is his exit potentially if he can get it.
Yeah.
But valuation matters. All right, so I didn't realize that was in question. Wait, what about? I saw some stuff about BuzzFeed yesterday because the news division staged a walkout in line with the vote, which I guess was yesterday. So tell us about that.
Yeah, so that's actually up next on the list. So ENFA, Fifth Avenue Partners, 890 Fifth Avenue Partners, is merging with BuzzFeed. So the vote went through. It's going to trade as BZFD, but Spencer, as you mentioned, there was some upset employees. Also, this had it had some redemptions, and also some of the pipe investors are trying to pull out of the deal. So if this deal actually goes through as everything has said on paper, the BuzzFeed could actually end up losing money on it, right? So instead of getting hundreds of millions of dollars between shareholders, the pipe, all that, they could actually not get enough money to even cover the cost to pay for the SPAC deal to go through. So obviously that could hurt BuzzFeed long-term potential there.
Wow, if that isn't indicative of the appetite for digital media, I don't know what is, because BuzzFeed was the darling. They've been trying to go public for years now.
Yeah,
and they got the SPAC deal, but they're not even at the finish line yet. They're almost there, and it looks like they're on the cusp of it, and they're not even going to make money on the deal.
Looks like we could see the stock trading at 890 pretty soon.
Oh wow, AB coming in hot
from the top rope.
Oh man. And I mean, look at that spike it had in after hours trading yesterday. So it moved up because again, heavy redemption, which lowers the float. But already those people have gotten out. So you're already down to $9. You no longer have the floor price, and there is some risk, obviously, that BuzzFeed will try to make sure this deal doesn't go through without having the pipe investors. So this one's gonna have a story played out for a while here.
All right, what else we got?
All right, and then so AGC completed their merger with Grab. So now it is trading as Grab Holdings, GRAB. This was a hot one, traded well over $10, and now you're down to $8.50. Again, a big play on growth in the Asia Pacific region. It's got interest in several sectors, food delivery, rideshare, financials, and others. But obviously, some of the Asian sector stocks have fallen out of favor. So I'm not too surprised, but we'll see what happens to this one going forward.
Yeah, this was a big one. Grab is huge. They're in Singapore, right?
Singapore and expanding to some other countries. And this was actually the largest SPAC deal ever in terms of valuation. So not a great sign to see it come down, but also to see it trade over $16 when it was already the largest deal based on a $10 price point is another reminder that, as you said, Spencer, valuation matters. So shares can't just double the valuation.
Here's the thing, right? If you are a SPAC, what kind of company are you going to buy? You're going to buy a high growth company, right? You're going to buy a company that's exciting for the future. But that's the exact thing that the market does not want to see right now. They don't care about growth. Okay, for a lot of reasons. So all these companies, the ones that make money, the ones that don't make money, the ones that are developing the futuristic technologies, they all sound cool. They're all out of favor. It does not matter the industry, frankly. All that matters is their growth, and we hate growth right now. So Grab was a big one. I mean, it was the biggest one. Valuation matters. The price you pay for things does matter. At least Grab, has a huge business, so they've got that going for them. It's an emerging markets play, and it wasn't the largest SPAC deal ever by accident, because they're a big company. But I was surprised to see it get down to 8 so quickly, Chris. It took one day.
Yeah.
One day. It's tough out there. All right, what else you got?
So
Is there anything that's not going down?
Another deal that recently was approved, DMYQ with Planet. So if you remember, we had Niccolo De Masi and Will Marshall from Planet on the show recently. So shares are at 968. And if you look at the chart, this is one that it held a little bit now below 10, and it only had 2% of shares redeemed. So it traded over net asset value going into the merger vote. This is a satellite play, right? Like a Bloomberg for the industry. Again, if you guys didn't watch that interview, check it out. Niccolo De Masi, well known in the SPAC community. But I think this one rebounds and gets over $10 here soon. It already had 4 analyst ratings going into the vote, which is tied for the most ever pre-merger vote. And as you heard Niccolo say, their analyst day was heavily attended, the most of any of his SPACs. So I think you're going to see more analyst notes out. And we obviously know that analyst ratings and price targets can be a potential catalyst for the stock.
Question from the chat from Firat King. Do you know the redemption rate for Grab and DMYQ?
DMYQ was 2%. Grab, I don't know off the top of my head, but I can't imagine that Grab was very high, given that shares were over 10. I know that Julian Klimachko, again, a big name in the SPAC community, he tweeted, Spencer AB, there's always that person that chooses to redeem their shares when they're trading at $15 or $16 versus just selling, in the market, and they essentially lose a ton of profits by redeeming when shares are trading that high. So I know some people did redeem on Grab, but it shouldn't have been very many.
Okay. All right. Let's move along here. We got a calendar. Is that? Oh no, we're not up to that yet. We got a couple more.
Yeah, so a couple to watch, right? So there was SHPW. This is a 3D printing play. It is low market cap, low float. So this one gained some steam on Twitter with a due diligence post that connected the company to NFTs. So Shapeways actually has worked with some NFT companies to print physical copies of people's NFTs. So they worked with Meebits, they worked with Cyberkongs and others. So, obviously NFT, a growing industry, people want to stay connected with the communities, and, they want to, not only own their NFT, but also get merch along the way. So this is one that, again, in the early stages of really monetizing the NFT platform that they have built out. But again, caution, it is low float and low market cap.
Physical NFTs?
Physical NFTs.
Come on.
We're going full circle.
Come on.
It goes all the way around.
What kind of fool do you take me to be, Chris? Come on.
It's a real thing.
It's not a real thing.
It is a real thing. I've seen them. So we have SEAH. So again, Supergroup, which was on the show a couple weeks ago. Yep. They finally set their merger vote date. So December 21st. And remember, you heard Eric Grubman talk about how, the SEC had delayed this. They came back. They wanted more information. Nothing changed with the company. They were still on track to get this deal done by January. And sure enough, now we get the merger vote date. We got a nice spike in after hours yesterday, but obviously a lot of red out there today, so not surprised. But this one, I think going into the merger vote date, you're going to see a lot of eyes on it. Pure play sports betting company, strong interest from retail traders.
Again, December 21st, right? So
yep.
That's what you said? Okay.
Yep.
All right, so have that on your radar if you're trading SEAH. And then Rocket Lab. There's a name I haven't thought about for a hot second.
So Rocket Lab, I had mentioned on, SPACs Tech several times. This is one of my favorites in the space sector, right? You can't buy shares of SpaceX. This is the next, best thing, right? In terms of launching satellites, launching rockets. And Bank of America actually had a really strong report on this company. They said that this is their favorite, a buy rating and a price target of $20, and saying that their growing satellite components business could contribute more than 50% of revenue in the future. 22 launches for the Electron rocket. 107 satellites sent into orbit. That makes it the second most frequently launched vehicle in the U.S., behind only SpaceX, and they are number 4 in terms of launches in the world. So the Bank of America is saying this is the best way for investors to gain near-term exposure to small satellite and space launch markets. They also had some news out over the past week on Neutron, their next rocket program. Again, they've got missions planned to several planets, asteroids, and a lot of exciting things. So if you follow the space sector, this is one where I think could be a winner there.
I just hope they don't have the same kind of problems that SpaceX is having right now.
SpaceX with their bankruptcy problems?
Yes, with their bankruptcy problems.
Supposedly. So then, Spencer, one of the things you said one of the times when I was on was these rocket launches, right? When they happen, it can be a catalyst for the stock. So we got to pay attention to dates. So NGCA, which is merging with Virgin Orbit, which is a launch company, they have a planned launch for the month of December. They don't have a flight window announced yet, but we know that when a flight window is announced, that becomes a catalyst. And then when the flight actually happens, that's another catalyst. So this is one I would keep on radar for the month of December. They've got some nice deals and a strong pipeline in place as well.
I haven't thought about space launches recently as a catalyst because they've been so short-lived, but good to know because we know these things can pop. Virgin Galactic has shown it. So, okay, what else we got?
So there was a short report put out yesterday on Redwire, RDW, and this was by the Bear Cave. And obviously there were some strong points talking about how they had some issues filing their financials, their report, which is a concern here. The things that were called into question that I want to highlight are there was a report that went around Twitter. There was a video from a Redwire executive who said that the company would announce a deal with Amazon in the next month or so. And that shot shares up. And we have not gotten a deal signed between Redwire and Amazon. What we did get was Redwire partnered with Blue Origin, which is, of course, co-founded by the same person.
Not the same thing.
So not the same thing. And here's where that comes into play. The executive either lied, didn't have the timing right, or misspoke and really meant Blue Origin. So I think that's to be determined. The other thing is, Spencer AB, I'll ask you guys, right? If a individual investor, let's say that owns shares of RDW, goes on Cameo and pays for a celebrity, let's say, I don't know, the Island Boys, to do a video talking about Redwire, does that make Redwire a celebrity SPAC?
No.
Absolutely not, right? So why should a short report call this a celebrity SPAC based on a Cameo video that was purchased outside of the company?
All right.
Well, we can ask Edwin directly, but maybe there's another celebrity.
I asked him already. So
we can. Wait. Hold on
answer.
though. Wait, hold on though. Back to I haven't gotten past the financials thing. So they're having trouble with stating their financials.
Yep. So they delayed their filing.
Okay. Huge red flag. Huge red flag.
Absolutely. So call your report. Delayed filings. Don't call your report celebrity SPAC sponsored Redwire. You know what I mean? There's a huge difference there.
All right. So, okay, maybe semantics. Frankly, if they can't even, if they've been public for how long now? A couple months, and they can't even file their SEC filings on time and accurately. No, thank you. But again, I don't know anything about the company. I also did not read the report, so I only know what you just told me. We have some questions in the chat for Chris. We'll get to those, I promise. There's a couple more things on the list, though.
Yeah, so the other thing I just wanted to touch on is, we are in a new month, December, so we know that merger votes act as a catalyst. So there's a lot of votes in December, so I don't know if we have time to go through all of them, but to highlight, some of the bigger ones. Next week on December 7th, we have a vote for DGNS, which is bringing Cvent public. Cvent is an events management company. They're partnered with Microsoft Teams. They also have an investment from Zoom. This is one where I think this could be a strong play, right? I don't think we're away from, teleconferencing, virtual events. They're a strong player in that industry, and also the partnership with Microsoft. They've been linked to, the metaverse that Microsoft is working on building out. So DGNS, vote next week. Spencer, Cvent from doing events, I'm assuming?
Cvent would be in the fictional Benzinga portfolio.
Yeah.
Companies that Benzinga pays for and uses. Cvent would be in there because we do use it. But that's all I really know. So
yeah.
Sorry.
And then we have DCRC next week. This is solid power. This is a battery play. So it's similar to like a QuantumScape, QS. It's already been a hot one. But again, once the deal goes through, we'll really see if it can maintain above the $10 mark. They are a couple years away, but they do have some strong partnerships with automotive companies. So that is one to definitely watch next week as well.
All right. Was that it for the calendar? No, that's a lot more.
There's a lot more, but again, maybe next week when I'm on, we can talk about, the later dates. SVOK also next week merging with Boxed. They're like a online Costco, right? Buying in bulk, but they also have a logistics business that others are using. They recently did an acquisition, which I think strengthens that business line. So that would be another one I would watch next week as well.
All right. Chris, we got time for a couple questions from the chat, yes?
Yes, what do you got?
Okay. Fear King again. Chris, please talk about FTCV. The deal is taking really long. That's my Fear King impression.
So FTCV merging with eToro, right? eToro is an international company. I'm not too surprised that this is taking a long time. Regulatory hurdles, right? It's an exchange. They've got crypto. So again, I think it's just, par for the course. eToro is a well-known brand. It's not very big in the U.S. In terms of their revenue buildup. That's the one thing that they really highlighted in their growth. They also started doing some advertising heavily, on TV in the U.S. and really building that up. Because for a while in the U.S. you could only do the copycat trading, and then they're building out where you can buy individual stocks and crypto. So again, I have liked the story with FTCV with eToro, but yes, it is taking a long time. But I wouldn't think that is too big of a red flag at this point yet.
I'm not a fan of the copycat trading. I mean, let me rephrase it. I would be a fan of people copying me, but I wouldn't want to copy anyone else's.
If people want ETFs, then they would just copy the Spencer portfolio.
Of course I think I'm the best, but no, I would never do that personally. All right, Chris Katje is Benzinga's SPAC guru, and he joins us on this show every week to talk about deals that happen, deals that don't happen, and any developments from any SPACs in the space, because there are a lot of them. I mean, Chris, they're all down today. The whole market's down today. It is what it is, but thanks for coming on. Did we miss anything? Is what I want to know.
I think that's it. It's a tough market out there today, but we'll be back with some deals and headlines next week.
All right, have a good one, Chris.
See ya.
All right, man, it is tough out there. I want to get to this message from the chat, from the Ajax 1312. Aaron Breed, do you see this? Why are you guys not talking about this 1929 scenario unfolding in real time?
Oh man, I mean, if Ajax is referring to the biggest market crash of all time, what would they call it, Black Monday?
I don't know which black it was. Yeah, Black
Tuesday, maybe?
Black Tuesday was 87, right? Black Monday was 29, I think, right?
Look, it's a bad day out there, but let's not get ahead of ourselves. Let's not put the put the horse in front of the carriage.
I think that's it.
Or put the carriage in
front of the horse.
Put the carriage in front of the horse.
Cart before the horse.
Cart before the horse. Let's just chill out, everybody. We could be talking about Monday opening everything in the green. Maybe Monday's red again, and then Tuesday it's green, or who knows.
Wait.
Either way, we've got a lot of ways to fall before we start talking about 1929 scenario.
All right, and just to be clear, I'm not laughing at the idea that the market can't go down. Clearly, the market is going down. But let me show you. Where's my chart? Here's my chart. Okay. Okay. We are here. We're at 451 in the SPY. All-time high is what? 473. Okay. So we're what, like 6% off the all-time highs?
Yeah.
Okay, something like that. I'm just doing some math in my head. Let's just zoom out for a second. All right. Now let's go to a monthly. And let's just zoom out. Now, there are two types of people. There are two reactions when you see this chart. The first reaction is to say, whoa, look how high we are. Big boy has to fall hard. This is not sustainable. It can't keep going like this. This is ridiculous. We have to come down because we've come up so high. And then there's the other side, which is like, wait a minute. Every single opportunity in history has been a buying opportunity, with the exception of the last couple of weeks, because we're obviously off all-time highs. Aaron and I don't know if there's going to be a depression. No one knows if there's going to be a depression. But calling this 1929, like, we're not even in the same galaxy as 1929. There are so many other things at play. All right, we went through a pandemic. Okay, we're coming out of that. Yes, there is inflation. Yes, the market is uncertain about what the Fed's going to do. If they're going to take their foot off the gas, market doesn't like that because they've had their foot on the gas for basically the last 12 years. But all that being said, I mean, calling this 1929. I think if last year taught us one thing, for better or worse, the Federal Reserve and central banks around the world will not let that happen. They will not let 1929 happen. We had the biggest crash last year. Like the worst month since 1929 maybe. And what did the Fed do? They literally dropped money from the sky on all of us. Okay, we've never gotten checks from the IRS, universal basic income, basically, right? Last year, the Federal Reserve will not let the market crash like 1929. They just won't. They learned from 2008 when they didn't do anything, or not nothing, but they slow played it in 08, 09, and they learned from that. Okay. We can go down. We are going down. We probably will keep going down. But to say we're heading towards a Great Depression 1929 scenario, I think is wrong-headed. And even if we do go down, I mean, think back to how freaking terrified we all were last March, last April, right? Things were scary. And that was a V bottom, right? We bounced so freaking hard. My point is, from a trading standpoint, yeah, you should definitely be concerned here about taking new longs. From a longer-term investing standpoint, even if we do have a crash, what are you going to do?
Buy the dip.
You're going to sell everything? Maybe if you need cash and you need to fund your lifestyle or something, or you're retired. But, like, for the rest of us, no. Sorry. I think calling this 1929 is frankly fear mongering. You're entitled to your opinion. It's fear mongering, and it's not even the same galaxy. The macro environment is so, just because we have inflation. Are you kidding me? Is that why you're afraid? Because we have inflation? So what? We have a little bit of inflation. It hasn't happened in 20 years. Okay, or 30 years. Whatever. 30 years? 30 years. Okay, it's not great. It sucks. But that does not make this 1929. It doesn't. Sorry.
We all have to just chill out. On red days, it's very easy to get caught up in the worst case scenario. But we've been proven time and time again throughout this past year that anytime we have these corrections, that buyers come in and the markets ultimately end up going up. I mean, Spencer, if you want to go ahead and share that SPY chart again, we can look back to when was it, in May?
Sure. Wait, I have to zoom way in though. Hold on.
I know, because we're looking at like
1998.
We're looking at 25 years of SPY right now.
Okay, wait. What do you want? Sorry, May.
When we had that big, maybe it'd be easier to see in Nasdaq because a lot of it was in the sell-off and growth.
Okay.
But when we saw that correction, or maybe back in September, maybe that's what I'm thinking of. When we had that big correction, people thought,
that guy.
Yeah, people thought, oh my God, this is the end of the bull run. The markets are going to crash, all this stuff. And then what happened 3 weeks later, we were breaking new all-time highs.
Yeah, it is certainly a massive bear market for growth stocks, right? If you are long Kathy Wood, as I am, right? I own the ARKW. It's been a tough year. Look at 122. Ouch, down 6% today. Okay, but this year is as bad as last year was good. Frankly, in growth. Last year was so ridiculously easy. So easy. You literally could throw a dart at a board and pick a stock out of a hat and make money last year. Everything went up. Everything went up. It's never that easy. This year is proving that. This is normal, right? Things are in favor. Things are out of favor. There's rotation. Some things don't go up forever. Valuation matters. That's the bottom line. I say it all the time. The price you pay for something doesn't matter until it does. Yeah. I think worrying about a Great Depression, worrying about something like that, I think is not prudent. But
well, like we said, Spencer, we're just gonna have to wait and see. For everyone out there that's freaking out right now, I implore you to just take a deep breath.
Chill.
Go do something else.
Go outside.
Don't look at your portfolio.
Go outside. You want to see my portfolio today? It's straight red today. Actually, straight red this month. Don't look at it.
All right, Spencer. Well, that's enough of us bloviating about the markets. We do have an interesting interview coming up that is with SEER Bio. We will have Omid Farokhzad and David Horn joining us.
That was a very good. Oh, well, I guess we should probably ask him.
We gotta ask Omid if it was really good or not. I don't know.
All right, I say it was good. Should we bring him on?
Let's bring him on.
All right.
I felt good about it.
I feel like you did good. That Omid, David, how we doing?
Gentlemen, great. How are you?
Did Aaron Bree get your name right, Omid?
I thought it was perfect. It sounded like my mother was calling my name. Actually, perfect.
You don't need to say that just to make me feel good.
It was great, guys.
Thank you. All right, before we get started, do y'all mind just sharing us kind of a little bit of background about SEER Bio for some of our audience that may not be familiar?
Yeah, sure. So SEER is a life science tools company focused in the proteomics space. We're a commercial stage public company. We have a product called the Proteograph Product Suite that lets a customer look at the totality of the proteomic content, the protein information in the biological system, in an unbiased or untargeted way at a speed, scale, cost that was previously not possible. And by virtue of that, they are able to do large-scale studies in the protein space, the likes of which I'm sure you guys have seen done in the genomic space in the last, several years.
Yep. So what's in the pipeline right now that you're very excited about?
You mean in terms of our product or in terms of?
Yeah, the product.
Yeah, so we are, we're a commercial company. We're in the second phase of our commercialization step. And maybe I should just take a step back and tell you what that means. We became a commercial company earlier this year, and we set out a 3-phase commercial plan that involved in phase 1, what we call the collaboration phase. In that phase, we worked with a handful of, if you would, thought leaders. And so that phase included customers like the Broad Institute in Boston, Oregon Health or Salk Institute, Discovery Life Sciences. And these are folks that are just experts. They tend to do very cutting edge work. They were the first to get our instrument. And then later on, around Q1, we announced that we were entering the second phase of our commercialization, and that was the limited release phase. We signaled that we would have a high single-digit number of these limited release customers before shifting to broad release. Now, a limited release customer is typically a customer that does large-scale studies. These are large contracts, in some cases multi-year contracts, and they commit to a large amount of consumables. If you look at the Proteograph product suite, it comprises of a consumables. Core to it is our nanoparticle that lets you sample the proteome. There is an instrument that automates the assay, and so that's a CapEx for these folks that they have to purchase the instrument. And then there's a software suite where data that comes out from the instrument, the customer can go from, if you would, biological data to biological insight. So the limited release customers then take on this product suite, relatively large commitment for them. And deliberately in that phase, we would work with customers across, for example, different customer types like CROs, pharma biotechs, clinical companies, et cetera. So we would have representative accounts across each of those. And then we had said that in early 2022, we would shift to our broad release. And so we're obviously approaching the end of 2021, heading into 2022. So you can expect both an announcement around those high single-digit number of LR customers and then entrance of broad release later in 2022.
With companies like yours, with biotechs, obviously funding is always an issue. So where are you at on that front? You guys are going to need to raise more money? Are you comfortable with your cash position or what?
Yeah, look, let me have maybe David answer that question on the finance part. I mean, from my perspective, we're in good shape. But David, do you want to comment about the IPO or the follow-on?
Sure. Yeah, thanks, Spencer. Yeah, we feel really good about where we are from a cash position. Today is exactly the 1-year anniversary of our IPO. And then we did a follow-on in January earlier this year. And so we have, as of September, $506 million on the balance sheet. And we're not, we'll have years of cash flow runway. So we feel really good about where we are and the ability, well-capitalized company to drive to profit.
And just what are you guys expecting in terms of demand next year once you do get these commercial releases out?
Yeah, so we're on track, as Omid said, to complete our limited release phase with a high single-digit number of customers and to initiate the broad release in early 2022. We've made some great progress this year against our objectives for the year, and we believe this measured approach to commercialization is paving the way for these broad release customers to seamlessly adopt the Proteograph product suite and scale their studies, because it's really about getting the instrument in their hands, getting them used to it, and then scaling up studies, doing larger and larger studies. So we're already seeing increasing momentum at these customer sites as they experience the power of the technology firsthand in their pilot studies. Then they'll present those studies, and we've already had some do that at the ASMS conference in late October, early November. And then they'll reimagine what they can do and do these scale-up studies. So we shared a lot of this progress on our earnings call recently, a couple of weeks ago, including the summary of these multiple poster presentations from ASMS, and all that's available on our website. On the demand front, we will give 2022 guidance early next year on our year-end earnings call.
And then just again, proteomics. Explain why we should care about that. Why is it important?
Yeah, look, I think to really grasp why proteomic, and by the way, why now, why we're seeing such growth, I think it's important to understand the relationship between genomics and proteomics. As you know, over the last 15 years, genomic has had a profound impact on human health. Today, given all the sequencing efforts globally, we've now sequenced over 1 million genomes, over 10 million exomes, and collectively at the population level, we've now identified over nearly 700 million genetic variants. But we know very little about what these mean. In fact, less than 0.1% of these variants have been functionally characterized. So we don't understand the biological function that these drive. Now, importantly, genes code for proteins. Now, genes are largely static indicator of our risk, but proteins are dynamic and a true indicator of our status in health disease spectrum. Imagine two genetically identical twins. One may get diabetes and one may not. So what drove that? Well, what drove that is the way the proteins in one twin behave differently than the proteins in the other twin. Now, proteins are basically the machinery of life. They're really the active molecules. They drive just about all biological functions. They're the enzymes, the antibodies, the pathway elements in the cells. The target of most therapeutics are proteins. And, unlike genome, where you've got basically, a handful of units that make it, 4 bases that make our genome, and all of us have about 20,000 genes. Proteins are far, far more complex. Number one, the building block is 20 units, not 4. And these 20,000 genes ultimately end up coding for 1 million different protein and protein variants. And all of these proteins work together in concert to really drive every biological function that you can imagine. The challenge has been that up until now, technologies that can do large-scale studies and uncover the complexity of the proteome did not exist. In fact, by the way, before SEER, and we wrote about this in our S1 before we went public, the largest unbiased deep plasma proteomic, and deep meaning a study that identified at least 600 or so proteins. So we had set the bar low, frankly. That was ever published was a study of about 48 samples. Contrast that, for example, to the size of the studies that we're now doing in the genomic side, where UK Biobank talking about 500,000, NIH 1 million. And so with the introduction of the Proteograph product suite, SEER fundamentally changed that. We can now begin to do very, very large scale studies on the proteomic side in an unbiased way, exactly as we did on the genomic side over the last 15 years. So, and by the way, with SEER going public late last year, a number of other companies that have now come, there's been a tremendous amount of enthusiasm in the marketplace around the entire proteomic space. Of course, these companies all approach the problem in a different way, but nonetheless, all synergistic and all very complementary.
All right, a lot to learn here. I mean, the space is so new. Like you said, everyone probably knows genomics, but maybe I'm just making a judgment call. But like, I'm way less familiar on what you're working on than the world of genomics. So a lot to learn here. We look forward to seeing the commercialization next year. But Omid, David, thank you both for joining us today on Benzinga Live.
Thank you so much for having us. Really appreciate it.
Yeah, thank you, Spencer. I appreciate it.
Have a good one. All right, we got a few minutes here, and what I want to do, Aaron, is we haven't done a crypto update yet. We have to do that, but I also want to look at just the overall market today. If I can pull
the overall market. If
I can just pull
Let
up
me guess.
Pull up Benzinga Pro. Wait, where is my Pro? Here it is. And I want to go to my scanner. Okay. And this is the tool that I use throughout the day.
Oh, D-Nut.
Right.
Krispy Kreme.
Right. So this is the tool that I use throughout the day to look at what is up, what is down, but mostly from the open. That's what I'm interested in, right? What is up, what is down from the open? Because the overnight session can kind of screw with, numbers a little bit. So then this is how I get like my sense for sentiment for the day. So top left is where my eyes are right now. I'm looking at the companies, and I'm sort of by top gainers, by percent change from the open. What do I see? Basically, no one big. I see nothing important here. I see D-Nut, like Aaron Bree just said. I see LabD, which is a leverage ETF. I see CPIX. I don't know what that is, to be honest with you. FCUV, that's interesting. The point is, small names. Look, the SQQQs, short the Qs. That tells me all I need to know. Short the Qs is one of my top gainers today. The market's top gainers today. So short tech, there you go. Same idea. No big names that are going to have influence on the market are up or are at least at the top of your leaderboard today from the open, right? WW, not interesting, right? Small company. And on the contrary, you move down to your bottom left. First off, just look at the amplitude. Just look at the size of these moves. Your top gainer today is up 12%. Your top loser is down twice that, 24%. All right, and you've got much larger. First off, you have many more names, and you have larger names because the entire market is down. Even like here, can we look at Marvel? Is it Marvel or Marvel? I don't know. MRVL, right? Because they had earnings last night. They
make the superhero movies, right?
Sure. No, they had great earnings last night. Okay, stock opened higher. Well, the high of the day was 3 hours ago, right? We've basically gotten. If you bought Marvel at the open, you're down, assuming you didn't sell it into that pop, which maybe that was a good trade. But my point is, nothing is up today. Krispy Kreme is up today. That should tell you all you need to know, right? It's just one of those days.
Can we check in on my trade that I made? I bought a Moderna call.
Yeah, you bought your bullish Moderna here for the next week or next couple of days here.
Yeah.
How are we looking?
I see that little green candle. It looks like we're trying to get a pop. I need more buyers coming in.
All right, let's go to a daily here.
Once we break that 300 mark, whew, off to the races.
Come on, daily. Come on, daily. Whoa. Wait a minute here. What's that high? 289. All right, we got a ways to go.
Before we hit, you think we're gonna come all the way down to that resistance level?
No, I just wanted to see where the high was. Wait, what is that? What the heck is that candle there?
Which one?
The one from November 4th.
I think that was after earnings, maybe.
I don't know what that is. What is going on with this chart? All right, this makes
Tiny Pie. So my routine for the ice rink, we've tried it a couple times. I'm working in some spins, a couple jumps here and there, but we really just want to make sure it's all patterned down and perfect before we go out and do it. Yeah,
no ETA on that. We're not going to commit to a date until we're pretty sure that we have something prepared. Yeah, Shelly, good call. TLT is up today, right? That's all you need to know is the TLT is trading higher. But every sector in the red from the open, that's what matters to me, and that's where we are today. So, as I said off the top of the show, it is a good day to talk about shorting. We're going to do that in a half hour with Dan Pipitone from TradeZero and Stephen Johnson, who's a trader. We're going to talk all about shorting. If you have questions about shorting, how to do it, this is going to be a new recurring segment that we do every single week. So save your questions. There was no question too stupid to ask. I promise you. We literally have gone out of our way to make this as simple and easy to understand as possible. Some of you are going to be like, yeah, I know. Well, then it's not for you, frankly, right? It's for people that don't know. So that'll be at 1 o'clock here. But Aaron Bree, we haven't done a crypto update today, so you mind rolling that intro while I bring up our heat map?
Yes, sir, I can. Let's take a look at this heat map, Spencer. It kind of looks like a heat map of the overall stock market today. A lot of red. We've talked about this before, Spencer, kind of the correlation between crypto and the stock market, at least in the big two, Bitcoin and Ethereum. We see Bitcoin and Ethereum both down more than 3% today. Ethereum down nearly 4%, Bitcoin down 3 3/10%, Cardano down 7.5%. You can see Dogecoin up there down 3.5%. If Dogecoin gets below that 20-cent level, Spencer, I don't know when the last time we've seen Dogecoin below 20 cents. Shiba Inu down as well. Matic up. Matic is up. One of the few cryptocurrencies that is up today, as well as
you got Matic, you got Luna, you got Atom.
what AXS is that? Avalanche? No, AVAX is Avalanche. What's AXS?
I don't know. Let's click on it. Axie Infinity. Duh.
Axie Infinity.
Yeah. Okay, so like obviously crypto is a risk asset. I'm not convinced that if the stock market were to go down for several months in a row, like call it 6 months in a row, or maybe even if it were to go down for a year, I'm not convinced that crypto would go down with it. If we had a longer term period of weakness, not a crash, just like a longer term period of downward movement in the stock market, I'm not convinced crypto would go down.
Wait. You're saying if we see the stock market continue to go down,
yeah,
you're not convinced crypto will continue to go down?
Correct.
I am. I think
you are.
I think we're correlated until proven otherwise.
Well, we are correlated on any given day. I mean, look at today, for example, right? But, I mean, there is something to be said for crypto being a hedge.
Nope, I don't buy it.
No?
Not at all.
Does anyone chat? Is anyone on my side here?
I'm sure there are people. I think that's like it's a contrarian opinion that I don't believe in.
Really? I think I'm the contrarian.
That you're saying you're the contrarian, that you think that crypto is a hedge. That's the whole point. That's everyone that like loves crypto loves talking about it as a hedge. Like, oh my God, inflation's so bad, you got to buy Bitcoin. Oh, if you want to insulate yourself from a market crash, you got to buy Bitcoin.
Yeah. Okay. So that's what the hodlers say.
The holder.
But everybody else agrees with you, right? Like all the people, like all like the I don't know how to categorize them. Most finance people agree with you, not me. Dennis agrees with you. I don't know. I just all right. Alexander agrees with me. And AJ is saying just plot him. We can do that right now. But the one thing though, AJ, is
I just tried to do that and it didn't really
work.
It worked. It didn't really prove my point as much, so I didn't.
Well, the problem with that, AJ, though, is that we had I'm saying if we had a longer term period of market weakness, which we haven't had. The SPY hasn't gone down 4 months in a row in 6 years.
I actually think, Spencer, that if the market goes down, say 10% in the month of January,
yep,
I'd bet that Bitcoin's down even more than that.
I don't know if I would take the other side of that, but
okay. So there goes your whole argument.
No. I'm saying but you have to like zoom out though. You gotta go longer term.
I know you're saying that if the market goes down, crypto is going to be a hedge. It's not going to correlate with the markets.
I didn't say over 1 month. I said over like 6 months.
Okay.
Hold on. Can I do what AJ wanted? Now I'm gonna pull up a chart of the SPY and the BTC here. Come on. Oh, what? That's weird. It didn't work. Hold on.
Yeah, Jay Rice gets it. Crypto is a hedge the same way gold's a hedge.
Well, that hasn't worked. So does that that proves your point, not mine? Okay, wait a minute. Can I pull up this chart? This is not
like there have been actual times where we can see Bitcoin not acting as a hedge over the past 2 years when the market crashed from coronavirus.
Yeah, that was a crash. That's Bitcoin not what I'm talking about.
I know what you're talking about. I'm saying history hasn't shown me that, so what's going to make me believe
there is no history? We haven't had a long-term period.
But there's like a 10-year history of Bitcoin in the markets, and for a while that it had no correlation whatsoever. And then in the past year and a half, we've seen some correlation. I don't know. I'm not saying that it's...
Okay, you're right. This chart...
It doesn't work.
It shows us nothing. This chart is useless.
It doesn't work.
This chart is useless. Take it off the screen. This shows me nothing. That was a chart crime. But I guess my point is this. We haven't had... The stocks haven't really gone down for a long period of time. And I would say long... The word long is arbitrary. I would define it as like at least 1 quarter of of declines. Haven't had that for quite a while. Okay, we'll call it two. We'll even say 2 quarters. Any given day, any given week, any given month, maybe. I'll give you that much. Bitcoin could be correlated with stocks, but longer term, I'm not. I don't know. I'm not convinced, and I think the majority are with him, or with Aaron.
Well, they're both risk assets, like you said.
I know.
So
I know. I don't know, man. We don't have precedent for this, so I'm not willing to call for Bitcoin 30,000 just yet.
Speaking of precedent, I haven't really heard of people talking about these unprecedented times as much as we were like a year ago.
Wait, what? like the term unprecedented times.
Remember, last year, it was like everyone, we were talking about unprecedented times, like 10 times a day.
Yeah.
I guess maybe we're in more precedented times right now. I don't know. It doesn't.
The times are so precedented. These times we're in are precedented as heck. Okay.
Kind of Omicron, Delta. We have precedent
they're so precedented. Andy, why? What isn't a risk asset? Bonds, Andy, gold, cash. Frankly, a lot of commodities, right? Silver. These are examples of
NFTs.
No, the things that I said are examples of quote unquote safe haven assets. My point is that we, in the history of Bitcoin being a thing, in the history of Bitcoin being mainstream, which I guess we can say has been 4 or 5 years now, we haven't had any period of prolonged weakness. I'm not gonna assume the two will be correlated when we don't have any history of that happening. Money Mitch, money under your pillow is also a safe haven asset. That would be a risk off asset. But
then you're losing money to inflation. I don't like that.
Now you're making my argument.
I don't like that. I don't like cash.
Now you're making my argument. Bitcoin, inflation hedge. That's what I'm saying. So bonds, gold, cash equivalents, money market funds, which is cash. Those would all be quote unquote safe haven risk off assets. You could even go a little bit further and say like value stocks, but in a market crash, everything correlations go to 1. Value goes down with growth. It's been a pretty rough 15 years for value stocks. So, but some people would argue value stocks in a weak market, but dividends, stocks that pay dividends, right? Because that's cash in your pocket. But those stocks also stink right now. So I don't know.
Why I don't get why. Going back to Moderna real quick.
Eric says invest in seeds.
That's not a bad idea.
Okay, wait, who was it? It was the guy from The Big Short. Brad Pitt in The Big Short invested in seeds. What's up? Yeah. REITs. That's a go on RM REITs.
I was just listening to I think it was like a Radio Lab or something on NPR where they were talking about they have these banks of seeds like buried in Antarctica, like in case of like an apocalyptic event. They have like food storage, and they're all. It sounded pretty cool because they have these guys working in these like remote locations where they have these like huge food banks just filled with seeds.
Yeah.
You knew about that?
No, I didn't know about that, but I'm acknowledging it. It sounds cool. How do we go along Antarctica? Is there a REIT for Antarctica? Someone?
I don't know. Someone out there in the chat. Maybe if you've heard that story before. I forget. That's what I do. I listen to the radio on the way home and I absorb things.
Do you listen to the radio or you listen to podcasts?
Both.
Okay. You actually listen to the radio?
Yeah, I used to.
Wow.
Well, in college, like my car didn't have a Bluetooth or aux cord or anything, so I literally just listened to our local like NPR station all the time. But they play, This American Life, Radio Lab, like all that. So those are podcasts technically, but I listen to them on the radio.
All right, that's what I've lived here I lived in Michigan for 6 years now, and I still I couldn't name you one radio station. I don't think.
Oh shoot! Did we get the wait here?
Yeah.
1051 The Bounce.
1051 The Bounce. That's not real. There's no way that's real.
I swear to God, that's real.
There's no way.
Aaron, Thomas, 1051 The Bounce. Have you heard of it? What? 1051 The Bounce.
Do you know what that is? Okay.
Yeah.
All right.
Thank you. All right.
That doesn't sound
Point
real.
for AB. All right, it looks like someone said, "Oh shoot, we got the 300 cross on Moderna, but then it came back down."
The bounce. It's funny. I don't know why that's so funny, but it is.
We could make it a stock thing, like when a stock bounces off resistance.
Like the bounce.
The bounce.
All right.
Yeah.
All right.
No, it's not a stock radio station. It's like hip hop. So what I was gonna say about Moderna is, so right now everyone's talking about, like, obviously with good reason, talking about it as like a COVID vaccine play. But I feel like people are overlooking Moderna's technology when it comes to,
Sure.
you know, because of what they were able to do with the COVID vaccine. Now they have the ability to essentially help alleviate AIDS and like all these other diseases. So I feel like investors are just getting kind of overlooked, or they're overlooking Moderna's long-term potential right now because they're only looking at it as a COVID play.
Sure. Everything you said is, I think, accurate. The problem, though, is Moderna is also growth, and the market hates growth right now.
It is, but Spencer, if you look at Moderna's, say, like PE compared to other growth stocks.
Okay, let's do it.
Hold on. Before you look, what do you think Moderna's PE is?
Oh gosh, the forward PE or the trailing PE?
I don't know.
Okay, I'm gonna guess. I don't know this. I'm top of my head. 50.
Okay, chat. What do you think? Without looking, what is Moderna's PE? Someone's gonna cheat.
50. I'm guessing 50.
All right, you're guessing 50.
I'm probably way off. Let's go on the pro. Where's my pro? Here it is. Go to overview. What? Really?
Yeah.
Forward PE of 12?
Yep.
Huh.
So when you look at Moderna compared to other growth stocks, it's not even trading at that crazy of a value.
All right. Okay, you got me there.
And if so, we had not a great jobs report this morning.
That seems to be the consensus, yes.
Not a great jobs report.
Yeah.
So if the 10-year bond yields stay low, that's great for these growth stocks. And I would love to see Moderna trading back up at that $450, $500 level it was.
I was way off. Noah was close. Noah said it's like 16.
It's just surprisingly low.
You're right. It is. I did not think that. And you know what's also crazy about that is it's not as if like the forward PE is high and the trailing is low. They're both in line. And you don't often see that very often. But
Can we talk about what the difference is between the forward PE and trailing PE?
Okay, yes. PE stands for price to earnings ratio. It's probably the king of the valuation ratios. If you don't know what that is, it's just it's a way that we can compare stocks to one another, because companies have different sizes, different growth rates, different float, different number of shares out there in the market. PE is a way to just give one number, price divided by earnings per share, and that one number serves as a general ballpark for how quote unquote expensive a stock is, how much money you have to pay for those earnings that the company is making. The historical PE of the S&P 500 is, I want to say, like 15, I think. Chad, help me out. I'm pretty sure it's 15.
Historical PE.
Historical PE of the
S&P?
S&P 500 is like 15.
I think it's around there. Yep.
Or is it? Wait, is it 30? Wait, chat. Is it 15 or 30?
Let's do a quick historic PE of S&P 500.
It's somewhere in that ballpark. Hold on, there's a fruit fly.
2883.
28. I'm sorry.
Current S&P PE ratio.
Okay.
That's current.
Yeah. So okay. So it's like 20. I think it might be closer to 20. The historical PE. I'm saying. Yeah. Hertz says 15. Okay. So anyway. So current PE ratio of the S&P 500 28. So like that's your measuring stick, and now we can basically look at.
So essentially, it's like this isn't golden standard 100%, but stocks that are trading of a PE below 15, you could argue are
value
cheap, right. for how much money they're making, what's on their balance sheet. Stocks that are trading above the 15, you could say are expensive. But what we've seen over the last 20 years is a lot of these stocks that have high PEs keep going up, and people are willing to pay that premium for these growth stocks that they know are going to be making money down the line. So whether it's you're looking at Apple, Apple's PEs actually look pretty good right now, but like
not terrible.
Tesla's, some of these crazy growth stocks that people are willing to pay that higher premium to get their hands in early. for that growth down the road.
Yeah. So, okay, to answer your original question, which was forward PE versus trailing PE. Trailing PE looks at his past earnings, prior earnings, right? The earnings that already happened. Forward PE looks at forward earnings estimates that the company has given. Now, future earnings, forward earnings, are more important because that's what we care about is future earnings. We don't care about past earnings. If you're an investor, you're not paying for past earnings. You're paying for the expectation of future earnings. So forward PE is generally is more important. It's what I would default to over trailing PE. And hey, not every company has a PE ratio because not every company has earnings.
Noah brings up a good point though, just that PE might be a little bit different for biotech stocks than if you're looking at like a technology stock or something. But yeah, I mean that's the bottom line for me is talking about being long Moderna, which I am. We've just heard a lot about how transformative this mRNA technology can be, and we've seen it work in action with the COVID vaccine. But going forward, I think there are going to be a lot of other applications. Could Moderna come down more? Of course. But I feel confident that in the long term, if we're talking 5-10 years down the line, Moderna will be doing pretty well because I think they are the leaders in this space that we'll see other biotechnology companies get into in this mRNA space.
I just want to say, speaking of podcasts, Aaron, I listened to a podcast from NPR called How I Built This. They had the founder of Moderna on like 2 months ago. This guy has founded like 5 companies, and Moderna is one of them. And he was like probably like one of the smartest people that I've ever heard speak.
Really?
He seemed like a literal genius. And yeah, I recommend that. It's called How I Built This. It's from a podcast from NPR. The episode's from like a month and a half ago or something. But check it. I don't even remember the guy's name, honestly.
I think they had Coinbase's CEO.
Yeah, I haven't gotten to that one yet.
Okay.
That's Brian Armstrong.
My friend sent me that one.
I haven't gotten there yet, but I will. I'm behind on my podcast, but what else is new? Jay asked, Jay, I feel like that's a trick question. Jay, you know the answer to that question. That's a trick. I don't know. I'm not going to fall for your trick, Jay. I don't know how it's a trick, but it's definitely a trick. Andy, why is a TLT going up so fast? Well,
wait, is that the bond yield?
Yeah, it's the 20-year bond ETF. So strictly speaking, Andy, TLT is inversely correlated to banks. Where's my pro? Let's get me a pro up on the screen here. So strictly speaking, TLT is inversely correlated to banks. So banks go down, TLT goes up, vice versa. You can see the XLF today, the financials, the bank ETF is down. So what is TLT doing? It is up.
But the 10-year Treasury note is down.
Yeah, man, dude, yield curve stuff makes my head hurt.
We'll do some research over the weekend.
But this is a reaction to this. Basically, only reacts to macro things like the jobs number, which we had today, which AB mentioned was light. Far fewer jobs added last month than economists were expecting. Though, if I'm being honest with you, I don't know how. I mean, look, the economy is so unprecedented right now, Aaron Bree, in terms of all the shocks to the system that COVID delivered.
I see what you did there.
Thank you. I don't know how much stock or how much weight we should be putting into estimates because things are so screwy. So the data is so screwy. That being said, we need estimates because we need something to compare the number to, and we need someone to tell us how to feel. But the estimates were way off for this month. The number was way light. What does that mean? Does it mean the Fed puts their foot back on the gas? I don't know, frankly. But anyway, what else do we have here? Yeah, Ramon, the Moderna guy was I don't know if he was smarter than Elon, but he was so freaking smart.
Wicked
honestly.
smart.
He was wicked, and yeah, hey, that was a Boston plug because they were in Massachusetts. So what else? What else here?
It's actually in Cambridge.
What's the difference? Sorry if I insulted.
It's like I don't know.
What even is the difference? Boston,
Ann Arbor to Detroit, except for Cambridge.
No difference. It's not different. It's the same thing. Whatever. Whatever. Okay, we had a few minutes here before we have this brand new. I'm very excited, guys, for this segment. Dan is a character. Steven is also a character. The guys that we're gonna have on in like 5 minutes from TradeZero. So I'm very excited for that. After them, at 1:30, we'll have Tony Benson from Wealth Builders HQ and Amazing Power Patterns. So he's going to give us his charts, what he's looking at today, this week, and hopefully give us some ideas either on the short side or on the long side or a little bit of both.
Yeah, before we get into it, so we are going to be talking about short selling, which I know has gotten just the idea of short selling has gotten a bad rap over the past year and a half or so. I think it's important to understand that short selling is actually a very important part of the stock market.
Yep.
It allows the stock market to function efficiently.
Yep.
Without it, I don't know. Really, the market would essentially not be able to operate in a free market in the functional, efficient way that it does currently, and it also allows people to get skin on both sides. So it's like you can make money off a stock you hate.
Yep. My dad and I had this debate a few years ago, and I said the exact same thing you just said, and my dad goes, "You sound like some Wall Street guy, some hedge fund guy. I don't buy it." It's like, all right, but I agree with everything you just said. Without shorts, this is what happens, right? Without shorts, everything goes way up. Wait, let me go this way. Up, crash. That's what happens without shorts, right? Shorts keep the market efficient. Shorts prevent that, right? Nobody wants this. Nobody wants that.
Well, and it's kind of ironic because the same people that talk about a lot of the quote unquote apes, the people that were trading GME, AMC, that talk about how much they hate short sellers, or even if you made a lot of money on Tesla, you wouldn't have had that run up without short sellers.
No, that's exactly what happened. There were no short sellers. Here, we'll go to GameStop or whatever. We'll go to GME or here. We'll just do GameStop. Okay. You had a absence of shorts. Nobody wanted to short GameStop in late January. Are you kidding me?
Right.
That's why you had that huge spike and then subsequent crash. Because there were no shorts. That's what shorting does. It keeps the market efficient. Let me just zoom in more. This is ridiculous. Right? Like, this is not ideal. Nobody wants this. Okay? Because if you're long and you sold up here, then yeah, great for you. You got lucky. You didn't know when the top was. No one knew when the top was. Congratulations if you made a great trade here and you made some money. But a lot of people lost money here, right? Like, everyone talks about the people that bought at 50 and sold at 300 or 400. What about the person that bought at 300 or 400 and is now down 50%, right? I mean, this is what happens without shorts in the market. This crazy stuff, right? Nobody wants crazy stuff. We like orderly buying and orderly selling. Shorts are just as part of the market as everything else. And our next guests are going to talk more about that, and I'm very excited to have him on. Yeah, I mean, there are some also. Mohammed's got a good point. Extenuating circumstances with the GameStop thing, but by and large, absence of shorts creates chaos, and nobody wants chaos. People like when the market behaves itself. And Ramona's right too. Frankly, shorts are more comfortable than pants.
Yeah, that's the comment of the day. Shorts are. I agree with that.
I wouldn't go quite as far as what Mike is saying. Crashes are good. I would say dips are good, right? I would say corrections are good. I mean, crashes aren't fun. We had a crash last year. That was terrifying. That was actually terrifying. The first time in my life, I was like scared of like the market.
It seems so long. We're almost coming up on 2 years of that, Spencer.
I know. Isn't that crazy?
Time flies when you're having fun in the
When you're
markets.
having fun when you're YOLOing on out of the money weeklies. Time flies, right?
Yep.
Yeah. All right. You know what? I see them both here. So let's just bring them on. I'm going to bring on Dan Pipitone, who's the CEO of TradeZero. And we've got an independent trader joining us as well, and all from different parts of the world, I want to add. Dan is in New York, and Steven Johnson is... he'll have to remind me where he is. He's somewhere in South America. But let's do this segment right now with TradeZero. What's up, guys?
What's going on?
What's going down?
Steven, remind me where you are again.
Dude, I'm in the greatest place on earth, Rio de Janeiro. I was just surfing this morning. It's paradise down here.
Wow, that is epic. That is epic. So we got Dan in New York. We got Steven in Rio. We got Aaron, Bree, and I in snowy Detroit. But them's the breaks. Okay, so just to set the stage for a second. Okay, why are we doing this right now? Why do you care? First off, TradeZero, as it says on the bottom of the screen there, they were the winner for the second year in a row of the Benzinga FinTech Award for Best Short Selling Platform. Okay, so we thought, who better to talk to about shorting than these guys right now? So Dan, welcome. Steven, welcome.
Thanks, fellas. Appreciate the time, and thanks for having us.
Okay, let's start with this. I said when I was teasing the segment a few minutes ago, I said, we are going to really go basic here. No question is too dumb to ask. So with that being said, Dan, I'm going to start with the most basic question.
Right.
In the world, what is short selling?
So very, very basically speaking, what a short sale is when an investor has desires to profit on something going
Wait,
down.
no. Dan, your audio is clipping. Hold on. Your audio just went janky.
We might need to switch headsets here.
One. Better?
Yes.
Back? Okay. Good?
Okay.
All right. Good?
Okay. I think we got you.
All right. So short selling is when investors short selling securities want to so it's basically a strategy that folks can use to profit when stocks go down. So basically what happens is a short seller will identify a security that they feel is going to go down. They initiate a short sale, and ideally the stock will go down. And if they cover it at a lower price, that difference between where they sold it and where they bought it back is their profit margin. If they were to short sell something and the stock went up and against them and they covered, that would be a losing trade. So
can you explain who the types of people, Dan, that short the market? Like anyone can, in theory, right?
Anyone can. So there's a few things. There are a few requirements in order to short sell the market. Number one, your broker has to be someone that allows you to short sell. That's first and foremost. Number two, you need to have a margin account. In order to have a margin account, you need to both fill out the margin paperwork with your broker when you're signing up your account, and you also need to maintain $2,000 to maintain a margin account. So once you have those pieces in place, then you're in a position to do a short sell if you so desire. So who are those people? For the most part, guys, I would say, just kind of to paint some broad strokes here, these are folks who are, maybe not, this is not their first trade they're doing a short sale on. These are folks who understand, who have a little bit more experience in the markets and how trading works. And I think many of these people who get into short selling are people who may have been, in a long position, and then something happens and the stock goes down so freaking fast, where they're like, hey, I wish that the stocks that I bought would go up as quick as sometimes the ones that I buy when they go down. And so experiencing that, people then want to, may look into how they can potentially profit from moves like that. And then so we see that many people who are interacting with us on the short side are people who do have some experience first trading on the long side and first with trading at all. And then, maybe have been in a situation where being on the long side has, worked against them.
Got it. And by the way, I want to add, if you're in the chat, you have a question, drop the question in there. We'll get to your questions. But Steven, I want to go to you because you're a trader.
Yes,
So
sir.
can you tell us a scenario, like what has to happen for you to what do you have to see out there to want to initiate a short position?
I mean, it's a good question, and I think probably the best way to answer it would be to say like what would be a good long idea, and then I can give the opposite to say what a good short potentially would be, because then I think it's more easy for people to grasp on the long side to then put it on the opposite and do the short. So for example, let me give you a scenario when maybe I would go long, like a hypothetical. Okay, I have a funny hypothetical that comes to mind. So
lay it on us.
Who does? You guys may or may not know who does. Personally, I love the place. So like hypothetically and actually literally, who does sell the best wings? They have great company, and by that I mean the staff and the company that you come with. And I have every time I've ever been to Hooters, I've had a fantastic experience.
Okay.
So
hey, don't laugh. Don't laugh.
I love Hooters. Some great chicken wings.
Wings are great. They are great.
The wings are great. Cold beer, chicken wings. What else could you ask for?
I've never been sad when I've left Hooters. I've entered sad, but I've never left sad. Do you know what I mean? I've always entered quite happy when I've been at Hooters and full with beautiful, nutritious, delicious chicken wings. So let's say that I believe that other people are going to think like me, and they're going to think Hooters is as nutritious and delicious as I do. So if there's an increase in demand and there's limited supply, everyone's going to buy. There's not enough supply. The stock's going to go up, right? So shorting is literally the exact opposite. So with Hooters, maybe there's a lot of demand because the chicken wings are delicious, but there's maybe a limited supply if there's too much demand. So with shorting, we're looking for the exact opposite. We're looking for maybe a lot of supply, a higher float, a very liquid float like 50, 100, 200, 300 million. And we're looking for very limited demand. We're looking for not too many people that want to buy. So for example, I like shorting biotechnology companies, companies that they haven't made a drug yet, but they're trying to. So if they're trying to make a drug, but they haven't yet, they don't have any revenues, right? So how do they make money? They're on the stock market, they raise money from shareholders, and then they keep on going at the expense of the shareholder. So the way I look at things is if a biotechnology company pops a press release to say, we're a step closer to releasing this drug, I look at it as, say the stock pops 50% on that news. I look at it as, has your company fundamentally changed? Is it now generating revenue? Because currently it's not, you're bleeding money. Is your stock, should it be worth 50% more based on the fact that there is hope that there might be a future? And for me, a lot of the times the answer is no, the company shouldn't be up. So if there's a lot of supply, not a lot of demand, if people aren't buying the news, I think that qualifies a good short.
Okay. There's a lot to digest there, but I think the biggest thing I'm taking away is that was like the first Hooters reference on this show. So I think I'm assuming.
Do they have Hooters in Brazil?
Yeah, I don't even know.
I was in Dubai for 8 years. They definitely don't have Hooters there.
Okay. All right.
It'd be a pretty boring Hooters.
In Brazil, they also don't. No, I haven't seen one yet. McDonald's and Burger King.
Moving right along. All right, Dan, you kind of already addressed this a little bit. My next question though is, I'm trying to go about this like, who, what, when, where, why, right? So we just talked about sort of the when and the why, Steven would short, but like where, and you kind of already said, you said margin account, you got to have that. But you are coming at this, like Steven's coming at this from a trader's perspective. You're coming at this from the other side, from the broker's perspective. So tell us just a little bit just about what happens there.
Sure. So again, like I said, your broker needs to have availability and the facility to allow you to short sale. So for us at TradeZero, when a customer comes on our platform and they want to do a short sale, they right from the platform they're easy to see, is the stock easy to borrow or not? And if the stock is easy to borrow, all the person has to do is press short, and the order is going to go out. They don't need to do anything else. And when they're pressing the short button, obviously they're hoping that the stock is going to go down so that they can buy it back at a later point at a less price and make that difference between where they sold it and where they buy it back. Now, if a stock is not easy to borrow, then there are a few mechanics that are happening behind the scenes, and I'm going to illustrate those. So on our platform, for example, if a stock's not easy to borrow, we give people a facility to try and find shares. It's called a locate. I'm not going to go too much into locates. That's kind of a class in and of itself. But in order to facilitate a short sale on a stock that's not easy to borrow, the broker needs to have a reasonable basis to believe that if the customer shorts the stock and holds it overnight, that we're going to be able to get shares delivered from an outside source. That outside source could either be our clearing firm, it could be another company that our broker dealer has a relationship. So when a customer comes on the system and they want to short something that's not easy to borrow means that the stock is on deposit with our clearing firm and is in ample supply. So a stock like an Apple or a Microsoft, there's lots of margin accounts that have those stocks long and that are essentially on deposit with the clearing firm. So what the clearing firm does is when those stocks are sitting in the margin account, they have the opportunity to loan those shares out to people who want to short the stock in an effort to bring some collateral into the clearing firm. So shorting as a mechanism and the ability for a clearing firm to loan shares out for short sellers to borrow and short has really come out of a need for clearing firms to raise money. That's kind of how this all started. And so with TradeZero, with our customers, when they want to short something that's not easy to borrow, behind the scenes, what we're doing is we are going out, we're scouring the universe of brokers that we're hooked up with, and we're saying, this customer wants to short these shares. Can you give us an indication that we're able to get those shares from you if the customer holds them short overnight? If that's a yes, we facilitate the short sale for the customer. If it's a no, then we would not be able to facilitate that short sale because we haven't identified shares that can be lent to us for purposes of shorting those shares. So there's some mechanics. Go ahead.
Go ahead.
I was just going to sum up. There's some mechanics that are going on really in real time behind the scenes where we're facilitating a short sale on something that's not easy to borrow in a matter of seconds. So when a user intimates that they want to short something, we're going out in real time. We're talking about microseconds. We're fanning that request out across multiple places. Those places are coming back and saying, yes, we have availability on this. And if we do have availability, this is the rate to get those shares. We present that to the user. If the user likes the rate, they do it. If they don't, they won't do it.
Got it. So I was just going to ask, when a lot of times for newer investors, when we're inquiring about short selling, people will tell us, oh, you don't want to short sell. You'll set yourself up for potentially unlimited losses. What do you say to that? Is that really necessarily true?
It is 100% true. So just like any investment, folks need to be going into them with their eyes wide open, right? And so theoretically, stocks can go up infinitely. On the downside, stocks can only go to zero. They don't go negative, right? We may go negative in our accounts, but the stock price will only go to zero. On the short side, imagine shorting Amazon at $10 a share, right? It's at 3,000 something. You'd be in a lot of trouble. So theoretically, that is possible. But obviously, there are risk systems in place that broker dealers employ and use for both the broker's protection and also for the customer's protection, that they don't, get into a situation where they're going to lose more than they have in their account.
Right, and as it says on the screen there, right, it's sort of really like when we say ask your broker, we're not just punting, we're saying ask your broker because every broker is different. So, yeah.
Not naming any names, but
Whoa.
there's a broker you'll know, and are familiar with who like and short selling, and I quote, to borrowing money.
Wait, Dan, hold on. Dan, I want you to keep talking, but your headset's being weird. And John, it was fine yesterday. It was fine yesterday. Wait, in the meantime, while you fix that though, Steven, can you just speak a little bit just to the risk control thing? Because as someone who shorts, you got to control your risk. That's the most important thing.
I mean, look, the shorting is a great strategy, and it's
better, guys.
But it's
yes, we got you, Dan.
better, yeah. Shorting is a great strategy, and I see a lot of the big traders, a lot of the big accounts, a lot of the people who are posting big gains on Twitter are all short sellers. But managing risk is absolutely essential, and there's a lot of ways that you can do it, and I think we'll get into it in a later episode. But the reason that managing risk can be challenging is because sometimes the market can be just absolutely chaotic for no logical reason. So, for example, imagine a situation where a virus spreads and there's a pandemic and everyone has to stay indoors, right? Imagine that situation. It's actually just happened, right? It's unimaginable. It's like a movie. So imagine this: coronavirus is spread across the world, right? We're all under lockdown orders. You're not allowed to go out. Yet a cinema chain, AMC, is making record highs, and it keeps on going higher, and it won't stop going higher. So there's times where there's just no logical reason why a stock can go higher, yet it just keeps on making new highs. And that's where shorting is particularly difficult. That's where there's particular risk. Because like as a short seller, sometimes you can be like, this can't go higher. This should not go higher. But the more shorts that think that, the more it can squeeze. So it's extremely important to have a plan, stick to a plan. I'm not perfect. Many people aren't perfect, but you've got to have a plan, stick to a plan. Like TradeZero's got auto liquidation. You can be took out should it go out of control.
All right. There's a lot of good questions here. I just want to say this is going to be a recurring segment. We're going to get more into the locate thing and other topics in later segments, but I do want to hit on a couple questions here. Muhammad asked a good question earlier. Muhammad asked the question, how come sometimes when a stock is going down, you can't short it? I assume, Dan, that he is referring to the alternative uptick rule, I think.
Yes.
But maybe he doesn't know what he's referring to. Can you just explain what that is?
That's a great question. So on stocks that are, I think the threshold is down 10%. There's some threshold that the exchanges say where there is the uptick rule kicks in, and this is a rule that's been put in place really for the purposes of protecting stocks and having people pile on and just continue to sell when stuff is happening very quickly, and then adding more fuel to the fire, if you will. So when this kicks in, what happens is when you want to do a short sell, it's not to say that you can't, but you must put out a short sell at least 1 penny above the bid price. So if a stock is going down, you need to put a limit order out. If a stock that's trading at 10 by 10.01 and it's in this status, if you want to place a short sell, you can't just short at 10. You have to put a short sell in at 10.01 and wait for the stock to come up to your price in order for you to short it. It's called the bid uptick rule, and that happens when stocks are go down by a certain amount in a certain period of time. Great question, Mohammed, because I imagine it's frustrating because you can't hit. You have to lift the offer. You can't hit the bid, right? Right. Okay. There's a lot of questions here. We don't have time to get to all these today, but I promise, guys, Dan and Steven are going to come back tomorrow, or not tomorrow, next week. Tomorrow would be weird. But let's just do a couple more of these, guys. Let's do. Oh gosh, Voodoo. Can you explain to people why a margin account is necessary to short sell?
Ooh, that's a good question.
A lot of
Voodoo.
people don't understand the purpose of how margin plays into short selling. Great question or comment.
So you with a margin account, you are actually borrowing the shares, and in order to borrow the shares, you need to have a margin account. Let me think about this for a second. I don't even it was going to roll off my tongue.
Just to give you a few seconds to think about it, I just want to say I am seeing #Hooters in Dubai trending across the comments as well.
Oh gosh,
just
trending. Let's get it going. Maybe we'll open one.
That is trending. Just while you have a few seconds to think.
We'll have to come back to you guys on that question, but I don't know the reason why. I just know that it is. So we'll come back to you on that one.
Okay, let's do one more, guys, and then again, we're going to be doing this as a new recurring segment. So let's look at. There's so many good questions.
I got a question.
Sure, go ahead, AB.
Would you guys consider like buying puts a way to maybe practice for short selling? Like maybe you're not ready to go out and actually short a stock, but you want to kind of dabble with trading on the short side. So maybe you go out and buy some puts.
What's great about doing that is that your downside is limited, right? When you buy a put, your loss is really limited to just what you've paid for the option contract. So it's a great thought to entertain and maybe to mentally kind of train your mind that I'm not only looking for a stock to go up and work out for me. So just kind of as an alternative look for what an investment looks like, buying a put. And just to enunciate, a put is an option contract where you're basically betting on the stock to go down. The put strike, a profitable put strike, you'd be buying a stock that's higher than your strike, and once it goes below the price, you'd be in the money. So that's a great thought, Aaron, and I think a strategy that a lot of people would use, before doing a short sale. It's a little bit more intuitive potentially, and also you have that loss limiting factor as well.
Well, right, and like you said, Dan, you have the limited downside risk when you're buying a put contract, but on the flip side, there may be benefits to actually short selling a stock compared to buying puts. I know for myself, like a lot of times, I'm not looking at the Greeks, the implied volatility,
right,
when I'm buying contracts. So you can sometimes buy a put, the stock goes down, and you still end up losing
money.
And it
doesn't. Right.
If you're shorting that stock, all that really matters is that it goes down.
Correct. And even if it goes down by a penny, there's still an opportunity for you to make money. The way options trade, it's not going to move penny for penny, with the stock, even if it's in the money. So, yeah, good point. It takes a little bit more for the stock to move, depending on where the option is, for that to also move, in lockstep.
Got it. All right. Well, Dan Pipitone is the CEO of TradeZero. Steven Johnson is an independent trader. If you want to learn more, guys, you can click on the link you can look at the link that I put on the screen right there, TradeZero.co or TradeZero.co/y-TradeZero. But Dan and Steven will be on the show again next week. So I know we didn't get to all your questions. I apologize. We've just cracked the surface here of shorts. There's so much more to discuss. We will do that next time, I promise. If you liked this segment, hit the like button. Dan, Steven, it was great to have you on. Have a great weekend, and we'll talk to you guys again.
And Hooters in Dubai.
And Hooters
Thanks.
in Dubai.
Don't push that. I'll not be allowed to fly back into the country.
Thanks a lot, guys.
Hey,
guys, bye.
All right, guys, let's go. Come on.
Wait, hold. Well, yeah, that was awesome.
Recurring segments. We said we were going to be doing a recurring segments. Let's go. Thank you, Dan, Steven, your characters.
JDs, what are you doing, JDs? Why are you out? Why are you getting out?
I actually can I just say that I was a little bit distracted during that segment. I'm not gonna lie.
Because you were thinking about Hooters?
No. I have very few interests in my life. One of them is the University of Maryland, where I went to college, specifically the University of Maryland basketball team. And our head coach just resigned. While that was going on. While that was going on. The season is like a month. We're like a month into the season. And Mark Turgeon just resigned. So my phone's blowing up right now. So I apologize if I seem distracted.
Were they having a bad year?
Yeah, it's not great. So,
hold on. While we're talking about college, I don't want to talk about college basketball because I'm sure, Spencer, you can remember back when Mizzou was kind of like a perennial top 25 team.
Hashtag Kim English, yeah.
Yeah, Kim English.
Yeah.
We would compete with, Kansas and everyone.
Yeah.
We played Liberty last night, who's a Sun team.
Atlantic Sun?
Yes.
Okay.
Do you want to guess the score of the game?
No, I don't want to guess the score of the game. Just tell me what happened.
Liberty won 66-45.
Ouch, that stings.
Yeah, Missouri is not good at basketball. Not good at football either.
All right, so this has been your college basketball talk. But anyway, we're going to be doing these every single week. Like I said, we're going to go more in depth on the locate process, right? How that works. We're going to talk about fundamental or technical setups. We're going to talk about controlling your risk. We're going to talk about how to use the VWAP. We're going to talk about different patterns you can use. So there's a lot to get to. We're going to talk more about this in subsequent weeks, but just so you know, this was just a preview, an appetizer, if you will, on short selling. Thanks to the guys at TradeZero for setting that up for us. Okay, it is 1:23, Aaron. We're going to have Tony Benson join us in 7 minutes to run through. Hey, and he shorts. Tony shorts too. So maybe he'll have some short setups for us today.
We were talking about it earlier in the show, Spencer.
What?
That we just have to wait and see what happens. That, we get these red days. It doesn't mean that we're going to see the market crash overall. I see some buyers coming into this market.
Oh, gosh.
A few different stocks are already starting to come up and bottom out.
Really?
Come off that bottom.
Can we look at some charts?
Well, I don't know. The S&P, it was at 450 when we started the show, and now it's at 453.
All right. Well, that's not nothing.
It's
not
a
nothing.
0.5%. So we were down 1.5%, and now we're only down 1% on the SPY.
Yeah, let's go intraday. No, not that. Intraday on the SPY. Let's go. Come on, computer. There we go. 15 minutes. Bada bing, bada boom. Yeah. Come on.
You're not showing the full picture here,
I'm
Spence.
trying to zoom and scroll. Give me a break. My computer is slow.
I'm not saying, oh my God, we're flipping green on the day. I'm saying the bleeding has... We've put a tourniquet on the bleeding for right now.
All right, forget the SPY.
For right now.
Show me the Qs. Actually, you know what? Forget the SPY. Show me the Qs and the IWM.
I bet Qs were getting an even bigger bounce.
No,
that's about the same.
No, but I would have guessed with you. Hey, how's the IWM doing? Because the IWM is in serious trouble. Okay, well, let's zoom out on this chart. This daily, it looks ugly. You have a series of lows here, right, from August, from September. You can kind of draw a trend line there, right? July, you got these lows. I mean, I'm no Jake Wujastic with my trend lines here, but I mean, you can clearly just draw that right there and just go right, bada bing. But I mean, sort of, kind of. I mean, not really, because we've actually fallen through that line. So, this does not look good. This does not look good in the IWM. This has been the index has been on the struggle bus all year. This is the one that is a truer representation of the market because the S&P 500 is so top heavy. The IWM has 2,000 stocks in it, and the largest stock I think is AMC, and it's like 1% or something like that, 1.5%. So this is concerning. No doubt. But like you said, AB, the bleeding has stopped for the moment. I'm gonna hold my breath though until 3:45 when we get those end of day imbalances.
Can I make a bold prediction?
Can I guess what your bold prediction is going to be?
Yeah.
The low of the day is in.
I don't even think that's that bold though.
Okay, fine. What's your bold prediction?
I think we're gonna see a big run into the close.
That is it. Okay, define a big run.
Like 0.5% on SPY.
So like you think we're gonna? Okay, wait. So on the SPY, you think we could end the day at what, 456?
Yeah, let's say that. But my bold prediction is that we're gonna be like it's gonna be in the last like
10 minutes,
10, 20 minutes. Do you remember that, by the way? Like during the COVID markets, we would have these like crazy run and sell-offs into the close. Like the last well, I'm sure if you were doing your at the close show, I don't know if you guys were at the time or not, but yes,
yep. I remember.
There would be some days where, especially on Fridays, like going into a weekend, where we would see certain stocks like run up 10-20% into close. It was just crazy.
Yeah, it was a crazy time. It was so crazy that it took me a while. It probably took a lot of people a while to like really remember what a normal time looked like, because it was like one thing. It was COVID, and then the Fed just like dropped the hammer and everything ripped high, and then you had the meme stocks happen. So and you can argue that we're still not back to an entirely normal market. I would say we mostly are in terms of just
Well,
normal.
we don't see the like crazy amount of volatility that we saw during the COVID. You know, it's like
Yeah. I mean, here, can we look at the VIX? No, I don't think we can on here. But yeah, I mean, the VIX has come down. It took though like a solid year for things to sort of settle down. It's almost hard to remember what things were like before COVID.
Wait, you can pull up VXX on.
Oh, see, I forgot about the VXX. Truth be told. Thanks, Aaron.
This is why Spencer needs AB here.
Wait a
sometimes.
minute. Okay, the VIX short-term futures ETN. Okay,
I mean, it's gonna roughly.
You're right.
It's gonna roughly track the VIX.
fine. Look, we've gone up. Ruh-roh.
I love it. If you're an options trader, you gotta love when you get a little bit more volatility. I miss these like big crazy runs. I remember there was one day, it wasn't me, it was one of my buddies that we were trading together though, and he bought these crazy Netflix calls at like 3:45, and Netflix ended up running like 5%.
Wait, 3:45, like the time?
Yeah.
Okay, just checking.
3:45 p.m. Eastern, like 15 minutes away from close, and he ended up turning like a couple $100 on these crazy out of the money calls that expired in like quite literally 15 minutes, and made like $1,000 off them or whatever. And I was like, only in this market, only in this environment. It was like probably last May I want to say, two months after the COVID crash.
Can I just say, sometimes Aaron and I give ideas and then don't take our own advice. If you were watching pre-market prep or live trading this morning, you heard me not be positive about Monday.com, MNDY. I just want to say, not that this was a hard call because everything's down today, but like down 11% straight off the open. I'm not going to say I told you so, but I did give you a warning. And then Dennis was like, nah, I don't like it.
I think it's a bearish sign for me that I've never even heard of this website before. I've never been to Monday.com in my life.
They advertise. They're like the number 3 podcast advertiser. They advertise on every single podcast. Monday.com. It's the workflow for the 21st century. I don't know. No, it's like Asana. It's the same thing as Asana. Okay, does that make you understand?
Let's check in on Asana's chart.
Oh gosh. Are we below 100?
Oh my god.
65, right? Yeah. Holy.
It hasn't moved a tad.
$65. Can we let's go to a daily here. Look at this Asana. Oh my gosh. And now we're below the 200 day. Get out. I mean, it's too late to say that. Frankly, I mean, if you're in it, I'm sorry.
JD's, I'm gonna blame you if my Moderna doesn't keep going up because you sold.
Gosh. And DocuSign is worse. DocuSign is worse. Down 41%. Aaron, 41%. I'm going to say it again. 41.
I mean,
oh my gosh.
This stock has been crazy. I'm not buying it here, though, Spencer. I'll tell you that much.
I said this, I think it was last week. I said this. Maybe it was a couple days ago. I don't know. Time is a circle, but no mercy.
Wait. Oh.
No mercy.
Someone said FedEx up nice into earnings. FedEx doesn't report today, do we?
No. Nobody reports on a Friday afternoon.
No, but I don't even. When does FedEx report?
No, they were out weeks ago.
Wait,
I think I could be wrong. Here, wait. Let's real fast. We'll check this and then we'll bring Tony on.
My Robinhood is saying December 16th.
FDX. Let's get rid of this time thing. Let's go.
2 weeks. Yep.
Oh, they report. I'm
December
sorry.
16th.
Yeah. Okay. They're all cycle. I always forget that. Bottom line. Holy cow. DocuSign 41%. No mercy for growth. Let's bring on Tony Benson and hopefully he can help us make sense of this.
I'm watching Moderna and Shopify. That's it.
All right, Tony, what's going on, man?
Hey, how you doing?
Are you just as bewildered? Not bewildered is the right word. Are you just amazed as I am at this DocuSign here?
Yeah, I actually meant to bring it up and look at it real quick. I haven't seen that, but
I mean,
at the same time, I mean,
I don't know what to say. What is it to say about it? It's like
nothing.
It's ruthless.
Yeah, which is not abnormal right now. A lot of the stuff's getting crushed. You see Microsoft?
No, it's the chat. I think has mentioned it. Let's look at Microsoft here.
DocuSign.
Well, come on, Microsoft.
Yeah, the hard part with DocuSign. Oh, I gotta share my screen, huh?
Microsoft down 3%. Yeah. flirting with the 50-day. Anyway, all right, yeah, share your screen with us here. Tell us. I'm sure you have some ideas though on the long, or maybe not the long, or maybe the short time, maybe both. I don't know. I'm sure you got something though for us, Tony. So share your screen and show us what you got here. What is this here? What chart is this?
Always have some. That is DocuSign. And
That's DocuSign.
I just got a little late start on updating the charts real quick, so we'll get some intraday
Okay.
data. It's not live, it's not streaming, but it will update the chart for us here. So let me move that out of the way. Let that finish. Yeah, that's DocuSign. Not real pretty today, but not much you can do with the gap. So, but real quick, if you want, if you don't mind, I'll just, because I know last time we talked, Aaron asked a question of how do I find my candidates, right? How do you discover something? What's my process? What's my system? So I'll just briefly explain so everybody understands. I'm a patterns guy. I love patterns. They're consistent. They're repetitive. That's what I'm looking for. So I've got a little filter in here, and this is just a charting program I use. I just a filter I won't go into, but it's basically just a filter that shows me optionable stocks because obviously I'm trading options. And it knocks it down to, you can see down the bottom left here, 358. So I've got 358 candidates here. And I basically just literally flip through it and look for a pattern. Considering that, and obviously it's going to take some training. It's not one of those things when you recognize a pattern, you've got to be able to train your eyes to see them on the right side. I started in 2000, back before the internet. We had all this technology that we have today. And one thing I got frustrated with is I recognized patterns, but I always saw them in the middle of the chart. And if it's in the middle of the chart back here, it doesn't do anything. And I started looking at opportunities that I could have made money, but I didn't because I wasn't there. So I trained myself to recognize the patterns on the right side. So basically I'll just flip through this list. I don't know if you can see the far left there, those little check boxes, but I can just flip through looking through. And if I see a pattern on the right side of the chart, I'll just flag it. So I just hit the space bar, puts a little check mark in there. And I literally just flip through. There's a beautiful one. There you go, Spencer. That's exactly why I love a Head and Shoulders right there. That's a textbook one. Side note.
Okay.
Coupang, that's actually I did a nice little day trade on that a few minutes ago. So I'll just flag. I'll go through this list and flag them all. And I know a lot of people like 358 is a lot, but when you go through it as quickly as 1 or 2 seconds per chart, it's only 5 to 10 minutes. So basically I do that, then I can hit the save. I hit the save button. It puts it into a watch list. And essentially I just filter it down. So I do a top-down approach where I'm taking a whole list of ones that meet my criteria, filter it down, and then I basically find the cream of the crop, the ones I like the most. And I bring it into a final watch list here. And then I go through these more in depth, analyze them, and find the ones I like the most, and then create a trading plan from there. And it's relatively simple, really not that complicated. So
all right. So and that leads us to the left side of your screen, which is that's the result.
Correct. So this is my final.
Right.
I always put the December 1st. This is the pattern of the week and I only do this once a week. It's not something I do every day.
I didn't realize that. That.
Yeah, I know that was something that I wanted to make sure is clear. This takes me about 1 to 2 hours typically. And I do it once a week. And then this is basically all I'm trading during the week, unless something pops up. I'm looking at stuff. I'm watching you guys all the time, looking at DocuSign, obviously. So if something pops up, it's not like I'm going to ignore it. But I don't spend any more time doing research. I create the plans, set them up, and then I just watch them and manage them the whole week. So it is basically Wednesday to Wednesday. So I do a pattern of the week for my subscribers once a week. I do it Wednesday. It gets posted on Thursday. And then, but that's basically how I find my candidates.
All right, so let's go through. I mean, we already just went through a couple of them. You mentioned Coupang. Gosh, though, no offense to Coupang, but that's a small one, right? And if that, I guess it doesn't matter. A pattern is a pattern. A chart's a chart, right? But set up in Coupang doesn't. I don't know. It's not going to move the market. It's not going to move the needle for the market here. So. Doesn't bode well. I look at the recognizability of names. Coupang is not very recognizable, but regardless, a setup is a setup. Doesn't matter who. Anyway, what else we got here?
Yeah, it's not. You can see it's not very old. So, and this is one I looked at and I thought, well, if it breaks the support level at 26, the pattern I saw here was a hammer pattern though, which is that candlestick yesterday. So the last candle there is today's. Whoops. So when there's a hammer pattern at a support like this, even though it's not a very old company, it's not a spectacular support, but it is pretty solid, then I was looking for a move to the upside today. I thought, you know what, if it jumps and runs, then I'll either jump on a day trade or possibly do an intermediate term trade and a short term like swing trade, 2 or 3 days to the upside. And where did it go? And I just did this a little bit ago, actually. Move this to a 5-minute real quick. So I took this as a day trade just a little bit ago. And you can see the trading plan. So the red was the stop. It came down here this morning. Right, where's the opens over here? Bouncing around. It's holding this line at 26. I figured if it took off, so I picked up some at 26.11 and sold out of a decent chunk of it here and then closed the rest of it out. I can't remember exactly where, but so that's all I was looking for with Coupang. That was the entire purpose of this here. It was a hammer pattern, give me a 1-day quick intraday pop or a 1-day, 2-day, 3-day move to the upside.
All right. Again,
but
bullish setup in Coupang.
yeah,
Doesn't make me bullish for the market, but a setup is a setup. What else? What is this?
exactly. That's why it was a Coupang was going to be short term.
Yeah.
This
is Alcoa?
Alcoa.
Okay.
Go ahead.
No, I was asking what stock it was.
Yeah, this is Alcoa. This is one of my favorites. It has been for a long time. Can be a very volatile stock, and the options are actually relatively inexpensive for how volatile the stock is. But this is a beautiful head and shoulders. It'd be a complex head and shoulders if you want to get super OCD. But I don't know how deep you want me to get into explaining the head and shoulders.
Deeper. Keep going.
All right.
I want to know, like, when the first time you can identify and say, okay, this is for sure a head and shoulders pattern forming, because I was looking at Apple's chart earlier, and it looked like we could be on like the first half of a head and shoulders, but not quite there yet. You see what I'm saying? If we get back down to that level, if we come back up again and get that right shoulder, but I guess we won't know if that happens until we get back down to that, what would that be, 156 level, and see if we bounce again?
Yeah, so if it comes down to that's actually a really good eye. Honestly, most people don't see it. And what's that?
I said thank you.
No, I mean, honestly, I've been coaching people for a dozen years now, and most people wouldn't see that. So honestly, it's yeah, if it comes down to the 156, 158, then bounces back up to 160, 62 and rolls over. If it does this, and this is why Microsoft was on the radar. And even though this is a little bit short for me, it's a little tighter than I like, because especially when you look at candles, the left shoulder is only a few days long. It's a week long. Typically, I want to see a head and shoulders that's got a longer period, but it doesn't necessarily matter. There's no rule or any right or wrong answer as far as how long it takes to form the shoulders, but typically they take a little longer time frame.
Got it. So wait, that was Alcoa.
Yep.
And then wait, but someone in the chat did ask about Microsoft. It was right before you came on. I forget who it was, but someone said, "I don't know what to do with my Microsoft."
Well, I can't obviously tell people what to do, but see what it's doing intraday, where the intraday charts go. I mean, if it depends on what your purpose is. What do you have Microsoft for? Is it a long-term hold?
I'm assuming if he's asking the question, I'm assuming not.
Not a long-term. It's just a trade.
I don't know. I don't know, Tony.
Yeah, that's what's tough about it. It's having a vague question of what's the purpose. If you're long the stock, and the chart's telling us that it's going to go lower, and the target probably about 305, 315, somewhere in there. I mean, the next major support is 305. So if you're short-term trading Microsoft and you want to hold it down to 305 and see if it holds that level. If it doesn't hold that level, then the next major level at least is 280. So what do you want to do with it? The signal is there. The head and shoulders is a bearish reversal pattern, obviously. So the odds are it's going to drop off down to the next major level, which is 305.
Just to answer the question from Mike being in the chat, I'm putting the link to Tony's site in chat. There it is, wealthbuildershq.com/patterns in a flash. Check it out there. Okay, let's keep running through the list here. Give us some. Oh, whoa!
You want to see that?
That was fun.
So I've heard, Tony, that the best way. Wait, this graphic's not done playing yet, is it?
No,
What's that?
No,
I think it froze.
the graphic.
Yeah, something weird happened there.
I was gonna say, so I've heard before from other technical traders that I've tried to learn something from that the best way to trade a head and shoulders is to short at the peak of the second shoulder on the right shoulder. Is that how you like to trade head and shoulders as well, or no? Did I get some bad advice?
Well, it's the funny thing. I mean, you could you could trade any way you want to. It's a little aggressive for me. I'll just let this finish out real quick, and then I'll go a little more in detail into it.
Oh, here we go.
And I think having this visually on the screen will make it easier to see. So
I'm trying to get it up there, Tony.
Huh?
No, nothing.
So right where that number 7 is, that's where I've heard like, okay, this is how you want to trade head and shoulders. Wait for that second shoulder right there on number 7, then put a short position out there. And their, I guess, thesis or reasoning for it is because oftentimes when it comes back down, it will drop below previous levels on that second shoulder.
Well, yeah, I mean, the whole concept of the head and shoulders is we've got a rally. Obviously, you got 0.3, we made a higher high. 0.5, we made a higher high. At 0.7, when it rolls over, then the bulls couldn't get it past the previous high. So they failed to get it back above the previous and make another new high. So that's at 0.7, you got an indication of weakness. There's no confirmation of the pattern yet. All it's done is formed. So you can trade it here. You could, I mean, I would possibly take a little position as it rolls over, but it's a very, very aggressive place to get into it. So technically it's not confirmed the pattern until it breaks the neckline. So you draw the trough, 0.4 to 0.6 is the two lows there. That's your neckline. Once it breaks the neckline, now we have confirmation. So at 0.7, if it rolls over, the pattern's technically only formed.
Ooh. You hear that, AB? It's not formed yet at the second shoulder.
Correct.
Ooh.
Now if it rolls over, then yes. But here's the mistake that I've made many times. I've had it roll over and right in here before it breaks the neckline. I'm like, you know what? This thing's probably going to go. I jump on board, and lo and behold, what happens? The neckline acts as support, which is what it is. So that neckline is technically a support level. So until it breaks that, and I've got my head handed to me many a times by getting in too early before it broke the neckline. But at the same time, and this is, I'm an aggressive trader, but I'm also very conservative. So I like the idea of getting in at 0.7 if it rolls over and picking up just a really small position, like maybe 1 or 2 contracts, either puts or short, depending on what you're, I don't know how much people are trading, but whatever your position side would normally be. Let's say if you're buying 10 contracts of an option, I'd maybe pick up 1 or 2 here and then put a stop slightly above there. So then if it stops you out, it doesn't cost you a lot. If it does take off to the downside, then you're in good position. You've already got profitability, and now you can add to the position as it falls.
God, this is a great visual. Guys, everyone, I recommend if you're into patterns, specifically the head and shoulders, save this visual. This is a really good breakdown here. Okay, can we go back to the charts here on the watch list, and then I know there are a few questions in the chat that people have, the tickers they want you to look at, but we'll get there. What else do we have here?
So yeah, Microsoft that's beautiful. I liked, actually, the last segment on shorting was awesome. I was watching that, and it's awesome. I got into puts yesterday on this, and I got out of some of it a little too early today. But J&J is another one. We'll stick with the theme of head and shoulders, and this is a long-term play because this doesn't look super pretty, but when you go to a weekly chart, that is a beautiful head and shoulders. So left shoulder, the big head, the right shoulder, and we are right on the edge. We're right at the neckline as of right now. So, and then I didn't get you with the graphic, which is fine. And actually that graphic's from one of the lessons that I have inside Patterns and Flash. So there's inside that tool, there's over 30 patterns that I go into lessons to go in depth into every little nook and cranny of the pattern to self-explain, the concept, everything you're looking for, when to trade and when to get in, when to get out. But the measured move, which you can see here on J&J, is 1756. So you measure from the top of the head down to the neckline. Whatever that distance is approximately what we expect it to move if it breaks the neckline.
And that actually, coincidentally, that answers a question that was in the chat just now, which was about time frames. And the answer is any time frame. you can apply on any time frame.
Exactly. This is one of the reasons. And I don't know. I think it was just dumb luck, but I fell in love with patterns right away. And the beauty of patterns and technical analysis in general is it doesn't matter what time frame you're looking at. I don't care what instrument you're trading. If you're trading currencies, futures, commodities, Bitcoin, Forex, anything, the concepts are all there. And so once you understand and learn technical analysis and how to recognize the patterns, you can literally trade on any time frame and any instrument you want. It doesn't matter. So I noticed that too in the chat. But so the other interesting part about J&J, so this is a weekly chart. You see the head and shoulders. So the possibility, if this thing stays below that neckline, I think you're about 158. And this is where very simple trading plan. Essentially, I look and say, okay, where's the stop? The stop for me would be above the neckline right there. So if I was going to get into this, which I'm not yet, I'm waiting for it actually to hit this 156 area. But I'm definitely watching this thing, and I'll probably look at buying an option for at least 6 months, if not a year, going out and looking at probably the target of 140. But
which stock is this?
This is still J&J.
Okay.
So I put a stop just above the neckline, and then the target's down here, 143. And the other interesting part about it, if we go back to here, is you've got the 50-day across the move, the 200-day, which is a huge institutional sell signal. So if J&J stays below that level, I'd definitely be getting bearish on it. But that's me.
Okay.
Anyone's in the chat that?
Well, I like that short position on J&J because you have kind of an inherent advantage there where a stock like J&J usually isn't that volatile, but if you're getting some movement on the downside, then its implied volatility will go higher, giving you, a higher value on that contract.
That's exactly why I love trading the downside. I'm a little bit biased, and that's because if you're buying puts and obviously the implied volatility spikes, then you get that delta flip and the premium goes up as it drops.
Right. Yeah, that's something that, if you trade options on both sides, then you kind of know that. Like you can buy calls on a stock, and if the stock's moving up but the whole market's up and VIX is moving down, then while your stock is moving up, VIX moving down hurts you, where on the flip side, VIX moving up while your stock is going down helps you when you have puts, if that makes sense.
Exactly. Most of the time.
Most of the time. No 100%, whatever,
Yeah.
but it's like a rule of thumb. No rule of thumb is 100%.
Yeah, if you have a huge spread like on car, I had a student of mine we were in our twice a month I do a 1 hour class for subscribers to my tool, and he said I got in the car. He bought puts when it ran up to 520, and he got
I remember that.
destroyed. On that day, he bought them. The stock was up at like 428. He said it dropped off to 250, and he still lost money.
Yeah.
It was crazy.
Yeah.
But
they don't tell you about that.
Huh?
They don't tell you about that. That could happen.
Exactly. That's why I always warn people. It's like be careful because options can be tricky.
All right. If you have a couple more, show them. If not, we'll get to some tickers in the chat, Tony.
Also, Tony, I got a question. Are there any stocks out there that you have found that, for you at least, that you're just like, this does not trade like the way that I'm seeing it, doesn't follow patterns, etc.?
Wow, that's a good question. I can't think of anything. I mean, almost everything follows a pattern to a certain degree, except a lot of the overseas stocks that gap every night because they trade in Europe, or the European companies, so they trade on our markets. If they're super gappy, I don't like those. If I see lots of gaps in it, I just ignore them because those are hard to. There's patterns there, but they're hard to trade.
You mean like Moderna?
Moderna's not international. Come on.
No, but it's gappy as hell.
It is gappy.
It's got
as hell.
gaps.
So
all
is Shopify. I like them. They're fun.
Yeah. Lately it's been gappy. Back in here, I mean, that left side of the chart, it's nice and steady and normal, but yeah, when it gaps like this, it's craziness.
Yeah.
So
I'm looking at Gap's chart right now.
Shoulders. What's that?
I was looking at Gap, the retail
GPS.
Yep. Why is its ticker GPS?
Gap story? I don't know. Gap story. I have no idea.
You would think.
Why don't you ask him?
You would think the stock with the ticker GPS would, I don't know, have something to do with navigation and mapping.
Nope.
No.
Anyway.
I know. So there's no patterns right now except just a cliff dive. It's not really a pattern, but.
No, although it does look like we're getting to that point, yeah, right there where we're going to be able to see if we're going to bounce off that. Oh, we've got a few hits on that level, so that could be a good buy zone. But then if we break through it, then we know we've got some more room to fall.
Yeah, and that's one reason I learned the hard way over the years that I always go back and look at the entire history because you never know where those spots are. Because I got hit on a lot of trades, and I was like, and then all of a sudden I went back and looked after I lost, and I went, wait a minute, there was support, major support back here. I mean, here's from 2004, 2005, some resistance about 15 there. So, yeah, the gap could, if it comes down to this 1450, 15 area and gives me some kind of pattern, I'd be looking for some kind of candlestick pattern, a hammer, hangman, maybe a double bottom. If gap's something you want to own, then if it comes down and builds a nice little base there and dances along it, then I put a hook above it and, hopefully it goes higher. So.
Yep, that's why we hear a lot of technical traders saying always look left. All right, everyone in the chat, if you've got a ticker you want us to look at, throw the ticker out there, and I'll say this: you'll be more likely to have your ticker selected if you give us the pattern that you think you see forming. So if you say if you say like I did, like, oh, I think I see a head and shoulders on Apple, then we'll check it out. We'll know what we need to be looking for. You don't need to put time frame or anything. I think we're mostly all looking at the dailies here.
Yeah, and also let us know if you are looking, if you have a bullish bias or a bearish bias or a neutral bias. The more information.
Yeah.
Okay.
The more likely you are to get. Well, all right. Arf said neo bullish, but I don't know what pattern he thinks we're looking at.
I don't know. Arf.
Arf.
That's a good name, Arf.
Arf.
So what is that? So that's neo. All right. Well, I don't know. What do you see here, Tony?
Another just cliff dive. And there's some, there's a lot of those right now. That's a
technical term.
So, yeah, maybe I should come up with that and create it. There's some support there at 31 a little bit, but it's not super solid. There's only that one spot and a little bit of congestion back here in October of 20. So, and as far as long-term trends go, there's really nothing to put on there. So, definitely not excited about the bullish side of this thing. With the overall market doing what it's doing, and until the market stabilizes a little bit and bounces, I wouldn't be at least not long term. I guess it's short term. It might bounce to 31, and if it does, then yeah, I'd maybe take a 1 or 2 day trade on it. But I wouldn't be. I'm not super excited about these things that are falling unless even being bearish. It's falling too far too fast. It's probably going to bounce first. I would expect it to bounce at about 31.
Okay, this is going to be a challenge for you, Tony. So we've got bearish on Hood. This will be tough because we don't really have anything left to base it off of.
We're at $21. This is at some point
you got to bounce.
I not even that though. Like at some point the valuation does start to make sense. I'm not saying we're there, but like, and I know that's not Tony's bag, but
I actually think this makes it more fun when you have no previous support levels. You literally just got to guess when will there be the support.
0. Next support level 0.
Tony.
There you go. Yeah.
Come on now.
Hey, just being realistic. But this is where fundamentals would come into play. I wouldn't trade this because you could look it up fundamentally and see where it's at. But are they even profitable?
I don't know. Maybe
they
take a lot of my money.
I can attest to that as well. All right, let's move off of this one here.
Okay. Easy Mike's got a good one. NVIDIA, he's looking at the 15-minute, but I'll let you look at whatever you want to look at, Tony. And he's saying he's seeing a double bottom at 301. So bullish, I'm assuming.
Double bottom or double top?
He's looking at the 15-minute. So he might have a little bit of a different view than what we're looking at right now.
Chart. Okay, let me bring up an intraday real quick. Microsoft's killing me. NVDA. I don't know if I have.
Oh, but so he's saying double bottom. We've got someone else saying NVIDIA double top. So
I don't know what to think.
That's what I thought. I thought double top, but if we're talking about,
I think that's probably what he meant. Yeah.
Okay, George has a good point. We can put the fib levels to look for bounces, but ideally, I like to see real support levels.
Great point, George. I second that.
Yeah, actually, Definitely. Whoever mentioned that, good eye. But I also see inverted head and shoulders, which, I mean, potato. The end result would be about the same anyway. So there's the inverted head and shoulders forming. There's also basically a double bottom. You could call it a triple bottom. Again, this is the beauty of patterns. I mean, you learn realistically, even though there's 30 in my tool, there's really only about 7 or 8 because you can flip them over and they're the same thing. Inverted head and shoulders, same thing, just turned upside down. So this is where if it breaks above 306, that's what I'll be looking for a break on an intraday basis. This is a 5-minute chart, not 15. So just so it's clear. But yeah, I like the looks of this from a pattern perspective.
All right, Tony, let's just do one more real quick. We got time for one more, okay?
You got it.
Let's do HPQ for a bull flag. Going value tech here.
It's getting there. It's not. I mean, I don't see any flag yet, but if it settles in here, well, let me just draw a couple lines on here just for. If it sits, what the heck just happened there? Oh, don't tell me it's going to die on me. There we go. I don't know why this thing's so slow. Just died on me. Oh well.
All right. Sorry, Eric Taylor. Eric Taylor, you have to.
We'll just shift gears and use this puppy real quick.
All right, cool.
Always got to have a backup. But basically, I mean, I guess I don't need to draw the lines, but not yet, not on a daily chart. If it dances around here for a few days, typically a flag will take a few days to maybe a few weeks, 2 to 3 weeks is typically. So if it just consolidates, kind of like back in here, or like here, you know, you got the big run, creates the flagpole, and then a little consolidation, a little tight range that it sits in. So yeah, that's another one that it's a good thing to keep an eye on. If it does that, if it sits here and dances around for a few days and then breaks to the upside, yeah. And flags are awesome continuation patterns because they very rarely reverse because there's usually so much momentum behind them, which you can see the volume here is massive. So there's so much momentum behind them that they very rarely create reversals. So whoever brought this up, thank you, because I'll keep an eye on it for the next week or two.
Wow. Nice job. Nice job, Eric.
There you go.
All right, we got to wrap. Tony Benson joins us every Friday. The link to his site is in the description. Tony, a pleasure as always. Have a good weekend.
Thanks, Spencer. See you later.
All right. It's 2 o'clock, guys. We got to run. The Mooner bus is going live right now. I think they're in like Florida or something.
I don't know. Ryan and Logan are crypto experts that run Mooner Bust. They're a lot cooler than I am. They're always out there doing something. So tune in for Mooner Bust if you want to learn more about what's happening in the crypto world. Everybody have a great weekend.
Hit the thumbs up.
Smash the like, as Spencer is saying. Please smash that like, subscribe if you have not already. And we'll be back on Monday.